Good morning, ladies and gentlemen. We are commencing International Trade E-Conclave. The theme of the conclave is Global Desi, India's global position in international trade. We would now request Mr. Timir Baron Chatterjee, Mentor of International Trade Committee, the Bengal Chamber of Commerce and Industry, and mentor and partner of TCN Global and Economic Advisory Services Private Limited, LLP, to kindly deliver the welcome and the introduction. Over to Mr. Chatterjee.
Thank you, Arnav, for giving me the opportunity to introduce the subject. International business is a very important area to look into, and in this background, organizing such a nice conclave will be a great importance to the people. As you know that our international business is still in the nascent stage. According to me, I will give you the figures that up to October 22, that is in the last 7 months, our export market was only 444 billion and our import was around 542 billion, including services. And we have around $98 billion trade deficit, including services, in the last 7 months. Our target is to reach $2 trillion in exports. And we are really trying to gear up. I can share with my own experience that the international business has certain problems in India, and basically in 4 areas, that is cost mismatch in the areas of logistics, in the areas of power cost, in the areas of ease of doing business, and fourth is the finance cost. These are the major 4 areas where we need to improve if we have to reach to an export turnover of $2 trillion, 1 trillion in respect of goods and 1 trillion in respect of services. And India is a country where really we can grow. It is a country of prospect. It is a country of hope. It is a country of aspirations, truly. Today, we are the 5th largest economy, but we are not the 5th largest international trader in the whole world. But we can achieve it. Almost everything is available. Now, in this background, organizing such a elaborate conclave, according to me, is the right process, and I am sure deliberations on various topics, from productions to financing to export trade to third country exports. This is a very, very important area, third country exports, where Singapore or Dubai is gaining importance, how India can really reposition its. In this background, and particularly as you know that India is holding the G20 presidency, and that will be extremely helpful for the country to grow, and we can utilize our presidency for the benefits of the country, not only our country, but also for the international world. With this, I'll conclude my deliberations, and I hope that the entire deliberations will be extremely helpful to the people, to the industry, to the service people. Thank you very much. Thank you, Arnab.
Thank you, sir. Mr. Chatterjee has wonderfully started the program with a note, but just wanted to understand more in-depth perspective on what is happening in around international trade. So we would request Mr. Saurabha Datta, Chairperson of International Trade Committee, BCCNI, and Senior Vice President, Industrial Sales and Marketing, Exide Industries Limited, to kindly deliver the industry perspective and keynote address. Over to Mr. Datta.
Thank you, Arnab. Good morning, ladies and gentlemen. A warm welcome to the International Trade E-Conclave. All of us know that the world is a different place. It has been, summed up by our External Affairs Minister, Mr. S. Jaishankar, who calls that the world is beset with problems, which is the debilitating consequences of the three C's: COVID, conflict, and climate change. The COVID-19 pandemic gutted economies across the globe, including of the rich nations. Even as the world struggled to recover from the ill effects of the pandemic, the Ukraine war in February saw a dangerous rise in the geopolitical tensions, in addition to setting off a devastating food and energy crisis. What was the result? Millions of people lost jobs, millions of people were pushed into extreme poverty. More than 70 countries, including neighboring Sri Lanka and Pakistan, are battling a severe debt crisis. And the world as a whole is staring at an alarming global recession in 2023. In this fragmented and somewhat chaotic post-COVID world, India looks like a beacon of stability. Our GDP at current prices is estimated to be 232 trillion Indian rupees, which is more than 3 trillion US dollars in 21-22. Our trade and external sector has a significant impact on the GDP growth as well as the expansion in the per capita income. From April to September 22, India's merchandise exports were at 232 US billion dollars. This was a 17% rise as compared to the same period previous year. In the same period, Indian imports totaled, of course, 380 billion US dollars, which was a 39% increase. So imports grew more than exports, and that is the reason why we need to increase our exports further. India is presently known as the most important player in the global economic landscape. Its trade policies, government reforms, and inherent economic strengths have attributed to its standing as one of the world's most sought-after destination for foreign investors. Also, the trade and economic sector in the years to come will augur well with the technological and industrial development which is being carried on by the government of India. The government of India has struck important deals with the government of Japan, Australia, and China, which will contribute more to the economic development. For example, if we take the case of Australia alone, 15 billion US dollars is the potential by 2025, and that will increase to 35 billion US dollars by 2035. The Ministry of Commerce and Industry, Consumer Affairs, Food and Public Distribution and Textiles, Mr. Piyush Goyal, aspires for India to achieve 2 trillion US dollars in exports by 2030. This will help India to become a key player in world trade. But what are the challenges? I had mentioned the 3 C's earlier. However, I feel that the biggest challenge we have post-COVID is change. Change is constant. Why am I mentioning this? It is rapid change which is the challenge. We have witnessed in the last 1 year rapid changes in currency, business dynamics, and market. Take the example of currency. Exporters heaved a sigh of relief when international freight rates started going down. This was somewhat lost in the currency fluctuations. I don't think anyone has ever witnessed such currency fluctuations earlier years. If we see euro, while the dollar went on rising, euro in a 1 year period went down from 88. The rupee went down from 88 to 79. So the rupee appreciated by almost 10% in period of less than 1 year. No export contract would have built in such a huge variation of currency. Even if something is built in, then also one will get rendered incompetitive if you are working in the Eurozone. Sujit Sharma, the noted economist, said on the dollar, when the dollar was rising, he said in around 3 months back that the dollar is at a natural high and it will come down. He was proved correct that within 2 months, the dollar came down. Now again, the dollar is rising. So how do exporters work in such a volatile environment? Business dynamics was always a factor in business. What we are witnessing now is more merger and acquisitions, more customers becoming competitors, moving up and down the value chain, markets disappearing quickly. We in our company have faced in this year at least 3 or 4 instances of markets disappearing. But it also throws up new opportunities, and we'll discuss this in sessions to follow. Climate change, which I had mentioned earlier, will have more effect with stricter laws, which will be discussed in the sessions. Before handing back to Arnab, I must emphasize that what is of paramount importance in this event, in this ever-changing world, is the speed of response to the external factors. Strategies have to be redrawn constantly. What is correct 2 months back is no longer correct today and will not be correct 2 months hence. So the window of time has shortened for all of us considerably, and we should always be on our toes and change ourselves constantly to succeed in this current situation. We will come up with the detailed proceedings of the discussions of the whole day program and prepare a recommendation on the basis, and that we will share with the relevant ministries. I look forward to an eventful and insightful day, and I hand over back to Arnab to start the proceedings for the day. Thank you.
Sir, we would thanks for your wonderful perspective on the industry, overall industry, that we have understood the even in the gloomy situation how we have the exporters would track their path. Just on that particular note, just wanted to ask one particular thing, that from you are primarily as a manufacturer. You have seen the worst days during the COVID, where the entire logistics supply chain had broken, and then you have seen a new path, the new start. According to you, how resilient are Indian exporters in terms of comeback story? How you feel that, how we have post-COVID scenario, how we have proved ourselves as resilient?
I think Indian exporters, have found out new markets. When one market is disappearing, as I said, it has happened to us thrice in this year, that markets have disappeared because of various reasons, because we are rendered incompetitive. See, when the dollar rises and the euro falls, in most of the world, the business is done in dollar. So most of your business is dollar denominated. So when the euro falls, which is an opposite effect, this is completely, a strange thing which happened. The European manufacturers became more competitive. And the Indian manufacturers or any other manufacturers were rendered incompetitive because our prices increased.
Absolutely.
So we found out new markets. We found out new products. So I'm like our company, we have a wide range of products. I'm sure all our Indian companies have wide range of products or geographies which are still unexplored.
Okay, so particularly exploring different markets, even at the adverse situation, was one of the key factors what Indian corporate had proved themselves as a resilient companies. On that note, we are yet to start the next session on strategizing trade finance in the global economy. We would definitely cover that overall. We would focus more on the exchange rate part and how this two different forces. One is dollar is going high and the euro is going down. Even in this dynamic situation, we would definitely discuss on the next session, which is coming up in a couple of minutes. We're just waiting for Mr. Anand Singh to join.
Just to add, Arnab, that the euro has again recovered. In the space of 6 months, it has recovered another 7%. So it fell by 10%, it has recovered 7%. So what we did in the meantime as a company, we kept our European business was not very remunerative when there was a 10% reduction. We kept in touch with all our partners. We said we are there. We executed orders even at very low margins, so that
Absolutely.
we are back in track. So this is something which all companies have proved resilient, as you said. How resilient is Indian manufacturers, and I think this is one of the main reasons in which we succeeded to keep our exports going. Uh, in many countries, in many geographies, tariff barriers had changed, So Indian exporters were put on a higher tariff. So again, markets disappeared because of that. So there were different reasons for markets disappearing. The Ukraine war, protectionism by certain markets.
Absolutely. So another thing that we are going to discuss over the period of time, that do you think that technology had somehow helped the overall journey of the exporters? The technology has helped when most of the people were working from home. There was no chance of physical documentation and all. So is there any what is your note on that?
I think technology has helped us post-COVID more than what it had helped us earlier, in the sense that in the exports market, you are not in constant touch with the customer, especially you are not in physical touch at all. And the earlier communication method was mostly, without any virtual presence, without seeing each other. Post-COVID, it has changed. And while now the physical means is still has come back, that we visit our customers, but now as a rule, the virtual meetings continue. So you are more in touch with the customer than you were before. So COVID has taught us, or COVID has forced us to be in constant touch with our customers virtually, but physical, seeing each other, knowing each other much better, and having a connect more often than not. So I think it has really helped us.
Absolutely. So we would also cover the sustainability factor, the age-defining new era in of capturing global markets. In many of the cases, particularly in the metal sector and many other sectors, we have seen that there is a huge focus on sustainability. Particularly if you're dealing with a manufacturing production unit, what is your take on that? That are we quite serious about exploring, focusing on the sustainability, or whether we are more concerned with the profit making thing? Than, because we have seen that on one hand we are talking about carbon emission and all, and on the other hand we have seen a huge coal crisis in our country. So in one way we are trying to continue with our, we are facing a continuous battle with low production of coal, and we are also stressing on sustainability. In such dimension, what is your take on the system?
One part of it is social. Okay, how third world economy like India would, have to use coal as a fuel source. But what our government has done is, we have said that we will not increase our dependence on coal. We will continue the usage. We will not reduce the usage. We'll keep it at the same level while increasing the non-conventional sources. Currently at 160 gigawatt, the target is 500 gigawatt of power in 2030. And mostly it will come from solar, hydrogen, biomass, etc. Now, again, other than social, it will become mandatory, for Indian exporters. Like there is one rule. I'll give an example of our company. We export batteries made of lead. So there's one rule which is going to come up in European Union shortly, is that you have to use recycled lead. So we anticipated this. We have started building up our recycled capacity. We use recycle lead to a large extent. So when this rule comes in the as a mandatory uh, requirement, we are already ready for it. We have already started the journey. So this is something which all of us have to be very in tune with, that if not socially, it has to come, as a mandatory rules. We have to follow the world in terms of the climate change requirements and emission requirements. So I
Great.
think that would be
Great, sir. Thank you. I think we have all the speakers of the strategizing trade finance sessions are all with us. Let me just go through the names of the people who would be joining in this session. Mr. Shomik Goswami, partner PwC India Consulting. Hi. Very good morning to you, Mr. Goswami. You have to unmute yourself. Yeah.
Good morning. Good morning.
Very
Am I
good
audible?
morning. Ms. Runa Bakshi, Managing Director and Country Head, Global Trade and Receivable Finance, HSBC India.
Hi, good
Hi,
good
hi.
morning. Am I audible?
Yes, yes, yes.
You are audible.
Absolutely, absolutely. And
Thank you.
Mr. T.D. Shivakumar has joined us earlier. Can we just say hi to?
Yeah, hi. A very good morning to everyone.
Very good morning. You have a wonderful background
Thank you.
of the Exim Bank. And Mr. Anand Singh, General Manager, Export Credit Guarantee Corporation Limited. Mr. Singh, have you joined?
Yes, sir. Yes, sir. I have joined.
Okay. Can we see you for a second? So, thank you. Great, great. So we have set the tone of the entire discussion, that what will be the proceeding of the entire day. With this, I hand it over to Mr. Goswami to take this thing forward with focusing on strategizing trade finance in global volatility. Over to Mr. Somik Goswami.
Thank you. Thank you. Very good morning, Arnab. And I was listening to Sharabda, and he was pointing some of the very eminent stuff around volatility, and one of them being the rapid swings in the way we have seen dollar going up and euro coming down and again recovering, and its impact in the market. So I think a very apt topic to have a conversation with eminent panelists between Mr. Anand, Mr. Shiv, Runa. Uh, you know, there is some music somewhere in the background. Some
Just
music
give us,
somewhere.
yeah, just give us 1 second. Yeah, now, please continue.
Thank you. Thank you. So let me set a context before I probably, invite the eminent speakers to.
Yeah. I would request all other speakers, well, if you are not speaking, please keep your microphone off, please. Over to Mr. Goswami.
Thank you. So, I think it's a very contextual topic, I must say, because of few important reasons. One, obviously, the way we have seen market unfolding, post-COVID, driven by several geopolitical issues, fluctuation of oil price, currency fluctuations. Apart from the mega trends that we used to generally talk about, which were rapid urbanization, demographic or social change, climate change, emerging global wealth, I think, apart from some of these mega trends, some of the, large impacting events that we have seen, all of us, and we continue to see in shape of sentiments between countries, war situations, etc., gives a very important perspective to look at how do you strategize trade finance in a global volatility. While the global trade finance market reached a value of probably 45 odd billion dollars in 2021, we also need to look at, while engaging in the world trade finance, enormous potential are there. How do we, as institution, make it much more amiable, easy to use, easy access for MSMEs to really grow and aspire or help them to aspire the growth of their business. The second piece, probably I was personally going through some of the reports and I was trying to reflect upon was the advent of technology in trade finance, which Mr. Shaurun Datta was also saying, that how it has become an impediment or how it has become part of life in bringing in technology in this whole trade finance conversation. And third piece is that how do you innovate and create new products with agility, which primarily would be more attractive to the market. So with that perspective, may I request Runa to probably, give her perspective for, maybe a few minutes, maybe 3-4 minutes, about how does she see in her role this whole strategizing for trade finance in a volatile market evolving, where agility, speed to market, response time are the most important levers or drivers of conversation. Over to you, Runa.
Thank you so much, Soumik, and good morning to everyone. It's a pleasure to be here. Just in terms of perspectives of, strategizing for global growth, I think today India is, placed despite, all challenges and the, the macroeconomic environment, there are a lot of opportunities that the country is well placed to take. And I think there are a few reasons why that is so. I think the one big reason there is to do with digitalization and the way we've leapfrogged in that area as a country to be able to take a lot more advantage from digital than many of our peers have been able to. And secondly, I think there's a lot of work being done in terms of making MSMEs more resilient, stronger, in terms of all the policy initiatives that are being taken, the way the whole India stack is playing out in terms of getting visibility of the data and the as well as their financial records, etc., in one single place, which can be accessed by many financiers. It gives a lot of transparency, and therefore the ability to finance them becomes much stronger. So I think these would be my opening remarks. As we go through the discussion, I think there's a lot for us to delve on and talk about, especially in these two areas.
Thanks, Runa. If I may move to Mr. Anand Singh, sir, your reflection on what you are seeing, from the perspective of how the volatility has impacted the trade finance market. How do you see the sentiments of MSMEs towards it?
Actually, since we are into credit insurance, so basically we deal with the non-payments. And since this FIFA World Cup is going on, so let me just share with you claim scenario where 2 editions back, where an MSME exporter was ordered T-shirts for the German team of 10,000 units, and they applied for cover and we issued the cover, and before the World Cup began, the supply was made, payment also came. Then Germany, the team of Germany was moving on gradually to the quarterfinals and then semi-finals. So the repeat order came on urgent basis for air shipments, 5,000 units. So they prepared the order and sent the shipments. But unfortunately, after 1 day after that, the German team lost. So that order got cancelled and we had to pay the claim. So there are similar scenarios in today's environment where if you go back to 10 years or maybe 15 years back, then the turbulence was not there. So if the environment is constant, then growth is there. So, but today, if you look at it, then you had COVID. After COVID, when the things were stabilizing, then you have this Ukraine-Russia conflict. Then you have the Sri Lanka crisis. So what I'm trying to say is that in the international trade, since things are a lot more interconnected now compared to the previous 10 years back, now the scope for error is very less. So due to these reasons, the insurance role of insurance becomes very critical, because insurance acts as a shock absorber in the trade scenario system. Due to this, IRDA has also taken an initiative where they have appointed general insurance companies, life and non-life, to take the leading role in each state, union territory, to spread the insurance awareness along with other insurance companies. So it is a good initiative, and we believe that over a period of time, the insurance awareness will result in the increase in base, which will ultimately result in lowering of premiums, because the base will get expanded. And more importantly is that whenever there is a default of in an export transaction, what happens is that the unit which has utilized the resources of the ecosystem to make that shipment, when it gets defaulted, it moves out of the sector. So credit insurance basically allows it to stay in that sector. So if you have credit insurance over a period of time, what will happen is that your base will be expanding. In the absence of credit insurance, what happens is you will be starting with 100 units in a financial year, and at the end of the financial year, if the defaults are there, 2 or 3%, then those 2-3 units will move out. So you are left with 97 units. So again, you have to invest your resources in bringing 3 more units to come to 100 and then move forward. So if credit insurance is there, then it allows these 3 units not to become NPA, and you are starting with a base of 100, and every year you keep on adding. So simply from a country's point of view, to increase the exports, we need to increase the number of exporters. If we increase the number of exporters, then automatically the exports will increase. And the rest of the things I'll share as the session goes on. Thank you.
Thanks, Mr. Singh. I think you laid down some very, very important points, and gives me ideas to ask some of the questions, especially around planning for uncertainty, where black swan events looks like to have become seasonal than what it used to be, or what we all have seen in our past. Coming to Mr. Shivakumar, Mr. Shivakumar, you come from the institution which has huge focus on MSMEs in terms of trying to help them grow, in terms of trying to help them expand. Your perspective with moving times, how does the ecosystem play come in to really help the exporters leapfrog in their plans and aspirations?
Yeah, thanks, Mr. Somi. Thanks for setting up the context, and it was nice hearing Mr. Runa and Mr. Anand's initial comments. As you said that since I'm coming from Exim Bank, maybe I'd like to slightly expand that context and talk about the current environment and what are the issues for trade finance as initial comments, and then later on move to the specific questions. So this is a little positive scenario on India's trade scenario. As everyone would know, that India's exports recovered well in last year after being hit by the pandemic in FY21. The merchandise exports recorded at $422 billion in FY22, up from $292 billion in FY21, a growth of about 44.6%. Even in the ongoing financial year, which is 22-23, India exports have displayed a decent growth, I should say, even with the ongoing Ukraine-Russia conflict and the global slowdown, as Mr. Anand was mentioning. During the period April to October 22, India registered exports of about $263 billion, an increase of about 12.5% over April-October last year. In this, petroleum crude and products contribute almost 22% of India's exports, followed by chemicals and related products at almost 13%. Now, looking at export credit issues, which is being the topic for today, over the last decade, India's merchandise exports, as you know, hovered around $300 billion mark, except that last year and current year probably, and this also includes because of some high commodity prices. The cause of this relatively muted export could be attributed in part to external market conditions, but at the same time, India also needs to work on a host of international issues, such as the financing facilities, access, and low export credit. This challenge specifically holds for the MSME sector, which accounts for about 45 to 50% of the total exports of the country. Growth in merchandise and service exports of any country is considered as an indicator of a healthy and vibrant economy, as you all understand. To attain that growth, availability of export credit is considered as a vital tool where the banking and financial sector where we all play a crucial role. Availability of adequate and timely credit, not just adequate, but also timely credit like pre-shipment, post-shipment is not only vital to start a business, but is also very important for maintaining the pace of growth and business. Looking at the trade finance graph, about 80 to 90% of the world trade today relies on the trade finance. According to an ADB survey, which we looked at on the trade finance recently, there existed a global trade finance gap of US dollar 1.7 trillion during the COVID pandemic in 2020, which is a 15% increase from the previous of US dollar 1.5 trillion around 2018. As a percentage of global goods trade, the gap increased to 10% in 2020 from about 8% in 2018. As per this survey, heightened economy uncertainties due to the pandemic constitute one of the top barriers for banks to serve global trade finance, about 61%, while 31% of the responding banks note that the pandemic raised risks faced by the banks. As per the ADB survey, SME account for only 23% of trade finance demand, compared to 54% of large corporations based on the trade finance proposal received by banks surveyed. Yet, SMEs account for 40% of trade finance rejections, which is a very, very important figure, much higher for its share of trade finance applications. Now, specifically looking at what is in India. Indian firms, especially MSMEs, are heavily dependent on the domestic market, but there is a need to look beyond. MSMEs have made use of this opportunity and exploring overseas markets, leading to an increased demand for trade finance. A report titled Trade Disrupted Digital MSMEs Lending in India estimated the total MSME credit demand in India is about 45 lakh crores, of which 25 lakh crore would be made through formal channels. But the balance 20 lakh crores was seen as the unmet credit demand, which is financed through informal channels. Thus, alternating financing channels, along with digitalization, which is I think a topic to be discussed today, are the need of the hour for the Indian firms, including MSMEs. Maybe I'll leave these initial thoughts, and when we go for the next round, maybe I'll touch upon my other points. Thanks, Mr. Amit.
Thanks, Mr. Shivkumar. It lays down a very different perspective to kick off the conversation. So if I may come to Mr. Anand Singh, and you took a very nice example, and I'm sure all of us were awake till early wee of the hours watching some of the interesting match of FIFA. So I'll take that example. You spoke about planning for uncertainty. So at times, uncertainty also gives you a huge amount of scope or opportunity to explore. And if that is the lens that you put, how do you create products or innovate products to really help some of these exporters to kind of aspire to leapfrog their aspiration in this uncertain market? Because as you took an example of the Germany team, which lost out early, and hence there was order cancellation. There could also be a situation where underdog team, called out business comes out for a huge growth, and where institution like yours need to lend hand to help the MSME fulfill that kind of a demand with agility. So how do you come across working with the ecosystem, innovate products, innovate services to make this happen? Sir, you are on mute.
Thank you, sir. Actually, if you look at the overall initiatives that the government is undertaking right now, then we have signed a MOU with the Ministry of MSME also, where exporters, a certain category of exporters who are new exporters having IEC code number less than 3 years, they are registered under Udyam, and for them there is a scheme recently we have launched where a certain premium amount will be refunded to them. So the idea is that if you are a new exporter, basically the cost of insurance will be free to you up to a certain amount. So depending upon this scheme is being implemented, it is the capacity building for first time exporters, CBFT scheme. So depending upon the performance of the scheme during the current financial year and thereafter, this scheme is in force till the financial year 25-26. The government may also take a view to increase it to other policies also for other exporters, for the category of exporters, and the amount may also be increased depending upon the response that we get from the market. Now, as you said that, before I answer your question, I would also like to, all of us, to take a look at the import, and as Mr. Shivkumar had given the figures, that if you look at the past trends, then the imports are somewhere around 1.5 times of the export, roughly on an average. So, and ECGC covers 239 countries globally. So if you look at this scenario, then we see that there are 239 blocks where import-export is taking place. So what is an export for me is import for another country. And similarly, what is an import for me is export for the other country. If you again analyze the terms of payment, because we as ECGC basically deal in the terms of payment. For exports, we say that where there is no risk, we don't charge any premium. So those terms of payment will be advance payments, or as exporter would prefer that there are no risks in LC transactions. So LC transactions are also considered to be safe. Then there are non-LC transactions, which basically are cash against delivery or DP, document against acceptance, and like that. So in the export sector, this terms of payment, non-LC terms of payment, account for a major part of the business. And vice versa, for imports, the advance and LC terms of payment account for the major portion. So what I'm trying to say is that when you are asking your supplier to supply, you are making him an advance payment. And when you act as a supplier, then you are giving on credit. So whatever growth or what should I say, like response of product diversification in terms of trade finance, whatever products are coming, basically they are catering to the post-shipment appetite. So if we can look at the pre-shipment stage also for similar products, so then your capacity as an exporter gets enhanced. Because right now, whatever situation we are in, if you go back 20 years back, then this situation was not there. Exports used to take place on advance or LC terms. Slowly and slowly, we have come to this stage where the non-LC transactions have become the major part of export transactions. So basically, as a supplier, we are giving on credit, and as a buyer, we are taking on advance. So as an import-export unit, my capacity gets restricted because before exporting, I am incurring dollar liability. Because I have paid to the supplier, I have paid to some Chinese company for shipments, for the supplies which I'll process, add value to it, and then export on credit. So there are instances where advance payment is made, but when the supply comes, it is not as per what was ordered. So that money goes down the drain. So due to these reasons, there are frictions created in the cycle. So as ECGC and other institutions also, which work as a facilitator in export transactions, it is our role to look at where we can make ease of doing business. So we are also examining cases where we have requirements from exporters who are, like you said, new companies, but they'll come in with the requirement of much higher in terms of export, 10 crores or 20 crores oil. And especially in African markets, where it is very difficult to get reports on the buyer. So in all these cases, ECGC always supports the exporter, because our motto is that when whatever export is taking place from India, it should be insured. Because in the longer run, if you see that what you are doing is, if you are getting the goods insured, then you are collecting some premium from that market. So for a commodity, some premium is coming back slowly and slowly, and a pool is getting built up. So tomorrow, if there is a default scenario, then from this pool, that loss can be compensated. On the other hand, if you are not creating that pool as a sector, if you are not creating that pool, then what will happen is you will be utilizing the resources of the ecosystem, and when the loss occurs, either you will be wiped away or you will take a hit and take 2 steps back. So it will take time for you to recover, to come to the position that you were earlier. So if we apply this concept across commodities, across markets, then what happens is that the base gets enlarged and ultimately the cost shrinks. So as ECGC, for the last more than 10 years, we have not increased our premium rates. The premium rates in for other lines of businesses like life insurance, motor insurance, all these insurance premiums have gone up. But for credit insurance, we have not increased the premium rates, although the losses are there. In the last 10 years, around 8,000 crores claims we have paid to the export sector. So basically, our mandate basically is to promote exports. So for that, whatever assistance we can provide through the export promotion councils, trade bodies, FIO, we keep on spreading the awareness, because as a new entrant into the export sector, primarily you should be concerned about the payment coming through, because in an export transaction, the default will always occur on the buyer side in a genuine case scenario. So mostly people do not secure that leg. What they'll do is they'll cover all their domestic up to that domestic stage, everything will be covered. But when it comes to the buyer, that mentality is there that nothing will happen. I have talked to him. It's a very good company. I have visited them. They have so many stores. But you never know, because what you are supplying to the buyer, he is not the end customer. Buyer is basically a distributor in the market. So once he receives the good, he will distribute it. If you are supplying him on DA 90 days terms, he'll again distribute it on DA 60, DA 30, DA 45. And ultimately, when those collections comes, he'll collect it and pass it on to you. So same thing happens end to end. It keeps on increasing. So if there is a friction in the supply chain of the buyer, then buyer, how much, it does not matter how good the company is, they'll default in payment. And the classic scenario of that is in the textile sector, where in the last financial year, we have paid huge claims. There were buyers, retail stores, JCPenney, Kmart, all these buyers were established players having stores across US, Europe. But ultimately, what COVID did was they went out of business, because during the COVID, this online transaction thing increased, which hit their market.
So sir, I'll come back to you on this point, because I wanted to discuss another issue with you, because you laid some important points in front of us. You touched upon an important point in supply chain, with which I would like to come to Runa, because Runa, you spoke about adoption of digitization big time, more than before. And when you talk about it, you cannot leave out supply chain in conversation, because it is not only about digitizing the operations, but how do you look at the end-to-end supply chain getting digitized, which actually answers what Mr. Anandson was trying to say, that you may be whatever best in the world, but unless you are able to cater to the demand with agility and in time, and keeping in mind the volatile market, you will not be able to really make value out of this whole thing. So, from your perspective, how do you see this resilience building up within the MSMEs around an end-to-end perspective of trade finance, leading to digitization, leading to technology adoption till the last mile of supply chain?
Sure, thanks, Somik. So we all know that trade has been traditionally very paper intensive and complex, and essentially that is due to the many parties that are involved in a transaction. There have been efforts in the past to digitalize trade, but perhaps the pandemic has been the biggest catalyst for digitalization that global trade has ever seen. And it has led to a surge of innovation, resulting in a plethora of digital solutions for almost every conceivable program in or problem in global trade and supply chain. And if we were to just take a simple example of cross-border trade and look at an LC transaction, excluding the credit period, in a normal scenario, an LC transaction takes 10 to 15 days to get negotiated with the transport of, goods and documents and everything. But with the use of blockchain, this can come down to 1 day. At HSBC, we've executed the first blockchain transaction globally, and interestingly, it is originated from India. However, the challenge in digitalization of trade has really not been the lack of innovation or solutions. The challenge is really to get to a state of critical mass whereby all participants are connected in the chain and can benefit from the end-to-end kind of processes which are paperless. And that has been a significantly long journey. The pandemic has probably achieved more for digitalization that in the last couple of years than the industry has collectively got to in the last many decades. But what is also resulting from this, development is that you're creating digital islands, so to say, where even today the focus is very limited in terms of navigating between these. And therefore the real goal, to the end goal has to be to get to a very high level of interoperability, and for which I think regulatory frameworks need to change. All parties to a trade transaction need to get into a setup or a system which is very standardized. So there are a lot of initiatives that are being taken to bring in the regulatory framework for cross-border trade to get a little more standardized. Right now we have UCP and standards for guarantees, etc. That is more transactional. But the framework for actually getting to digital trade requires a lot more work to be done, and which I think has started with the G7 actually calling out digitalization of trade as a key agenda. But I think some ground to cover. On the other hand, if we were to look at domestic trade, in many ways, I think thanks to the India Stack and other initiatives like e-invoicing, e-way bills, there is a very strong potential for domestic trade to become, entirely paperless in the foreseeable future. You spoke about supply chain. Now, I think from a granular bank level perspective, I think most, if not all, banks offer very comprehensive electronic channels to initiate supply chain and trade transactions. Banks are now enabling new technology by usage of APIs, etc., which can manage high volume, time critical transactions. And more importantly, I think banking is really emerging as a service. So banking as a service is fast gaining ground. So I think probably the traditional way in which trade was done is changing. Perhaps the pace needs to pick up, but with the emergence of things like banking as a service, embedded finance, it is really only a matter of time that trade gets to that inflection point to completely transform the transactional character of its nature of its business through digitalization. So I think a lot of work has happened and a lot of positive developments since COVID. But clearly, I think as far as supply chain is concerned, I think there's a lot more digitalization and automation today than there was. Is there still a lot of work to be done and area to cover? Then that's absolutely the case. But I think the good news is that all participants seem to be wanting to get to that destination. And I think the key will really be adoption more than anything else.
Thanks, Rona. Really well articulated. With that, let me tee off Mr. Shivakumar. Mr. Shivakumar, you represent a very, very important institution which has an important stake in the whole ecosystem play to run various initiatives in trade finance to support the MSMEs. And also primarily work with the government on various regulatory regimes, policies, matter, etc. So we'd like to hear from you, some of the initiatives EXIM is taking beyond normal to help, trade finance, and also your perspective on how some of these regulatory regimes are changing or policies are changing to make things much more viable.
Thanks, Somik. Maybe I should start from a more regulatory perspective before we come to EXIM. In fact, some of the things which I would feel government has done really well in terms of trade finance. In fact, way back in mid 2010s, RBI first allowed the non-recourse factoring, which was a major step towards the Indian MSMEs able to get financing on a non-recourse basis. I think that was one major one. Then even during the pandemic, this was one of the two act which was passed as an ordinance, the Factoring Regulation Act, which got amended in 2021, and RBI was empowered to make regulations towards factoring. So these related to these two. One is non-recourse factoring and Factor Regulation Act in 2020, which is the follow-up of the first one, which is done in 2011. These related to factoring. The other one, which I think government has done, is the TREDS platform, which became operational in 2017. This itself, I think, but then the earlier RBI governor, I think, I understand that it was, taken from another country as a best practice, and it has been implemented. But the initial, 2 years, was just doing okay. But the last 2-3 years, it is doing phenomenally well. The TREDS platform, it really helps the MSMEs in terms of their, the working capital requirements. That is something which is, again, which government has done. The third one, which I feel the government has done for the trade finance regulatory framework, is the IRDA opening up the credit insurance for factoring. Till about 2020, the banks and NBFCs cannot take the credit insurance for the cover within India, but which is IRDA has now opened up. So that's something which is possible. This is the third one. The fourth one, I would say, I think is a very path-breaking one, which government is attempting, is the IFSCA is creating something called an ITFS platform. The ITFS platform is something similar to TREDS, but in international environment. IFSCA has issued in principle approval for 4 companies to provide a proof of concept, and they are likely to do the sandbox testing anytime. And then once it is done, I think in the next few months it will start. I think these are 3-4 areas: one on factoring, one on TREDS, one on insurance available for factoring, and the fourth one is the ITFS, which government is trying to do in GIFT City. So these are the 4. Coming to what Exim Bank is planning to do. In fact, when Mr. Soumik was mentioning that we are a very important institution. Yes, we give loans to overseas governments, to large corporations, but we saw that there's a large gap for the MSMEs in terms of trade finance. So we are working on a few products specifically towards meeting the trade finance. As you know, we have launched a program called Trade Assistance Program, which is to meet the credit finance requirements of Indian MSMEs, especially Indian MSMEs, for the LC. So what happens? Sometimes they get LCs from an overseas bank from a particular country. That LC is not acceptable to their bank. So we have introduced an LC guarantee program, wherein their banks can confirm those LCs based on Exim Bank's guarantee. So we have currently in the phase 1 we've covered about 54 countries and many banks. So if an Indian MSME has an LC, which its bank is not able to confirm because that bank is not aware of that particular country's economy or the particular bank rating, etc. Exim Bank, being interacting with these various banks and governments and various countries, gives guarantee to that LC confirming bank. So that's something which we have launched. We are doing some sample transactions. We have done many transactions. We're going to formally launch anytime. The second one, which we have got the board approval, we are putting the systems in place to offer factoring. Factoring is not new to Exim. In fact, Exim was offering factoring in early 2000s. And then, that time the Factoring Act was not there. So, Exim sort of, had a step back. But after the Factoring, the Amendment Act came, Exim put in its thoughts together and got the board approval. So, about 80% of the trade finance is open credit, as you all would know. So, we wanted to focus on the open credit part. So, initially, we'll offer the factoring from Exim Bank itself. And once this is stabilized, we are also planning to set up a subsidiary in GIFT City to offer only factoring, export factoring for MSMEs. This is the second one. And touching upon some of this, what I think I specifically was listening to Ms. Runa, who mentioned about the technology part. Exim Bank is also working on technology, like we are also working on blockchain. We want to work closely with the Association of Banks who are entering into blockchain, so that the technology helps the Indian companies to speed up the processing time. That is the one. And also in terms of the data aggregators to simplify the due diligence is what again we are looking at. Even for the factoring, as part of our medium-term business strategy, we wanted to introduce technology. It's called Factoring 2.0 once it is stabilized. So these are some of the initiatives Exim Bank is taking to cover both the I would say documentary credit, which was about 20% of the international trade, and factoring for which covers about 80% of the trade. So we'll cover the entire gamut, and this will help mostly MSMEs to increase their exports to uncharted territories. But maybe I'll pause there. If there's any more questions, I'll be happy to take it.
Thanks. I think we have 5 minutes left, but I don't want to lose this opportunity to ask each one of you a question before I hand it over to Arnav. So if I come to Anand Singh, Sir, cross-border trade in rupees. Your perspective in a minute, how it is going to help Indian traders.
It will definitely help because one side is that pressure on the dollar will be released to whatever extent we trade in rupee, and basically more avenues will open up. If we are successful with the few channels where we have established this cross-border transaction in rupees, then other countries may also be brought into fold where because right now in terms of percentage the data may not be very significant, but if we work on the basics and then slowly over a period of time we can apply it to other major destinations also. Thank you.
If I come to Runa, Runa, while lending, how conscious are you all as institution to look at how the receivers are becoming conscious about the ESG piece of it?
So definitely as an institution, in fact, HSBC has taken the lead to signing up to some very ambitious ESG targets for us ourselves as an institution, as well as the kind of financing we do. So clearly there's a lot of attention and focus in that area. We are actually not just on the lending side doing a lot of green loans or in the choice of sectors, but equally doing a lot of innovative products around, say, green deposits, green guarantees, looking at sustainable supply chain where we are able to embed the tier 1, tier 2, tier 3 suppliers in a way that they are carbon neutral, and they're also subscribing to the larger sustainability standards and goals. So I think it's a journey that's been well begun, and of course a lot of work to be done, but clearly something that we are extremely committed to as an institution.
Thanks, Runa. Mr. Shivkumar, every volatility will come with an element of risk around it. And that is where comes the maturity of holding to a position and create a balance between volatility and risk. Your perspective on that before we conclude?
Yeah, thanks, Soumik. As you rightly said, the volatility and risk comes together. So more and more Indian exporters going to overseas markets, uncharted territories, there is more risk. But I would say that we cannot stop business because of this. We need to have a suitable mitigants, and there are enough mitigants by the financial institutions in the Indian context, which will be able to support Indian exporters to manage the volatility and risk. And I think there is a huge potential for Indian exporters to increase exports. And Government of India focuses a lot of exports, and India Exim Bank will be more than happy to support any of the initiatives of Indian exporters towards this.
Thanks. It was an amazing, engaging conversation of 30 minutes. I learned a lot, and some of the key takeaways from me is absolutely crystal clear. One, agility of innovating new products and services in helping MSMEs adopt more. Second, adoption of technology to the last mile, which is going to be a part of our life. Third, volatility is something which is going to become more seasonal in this moving world. We'll see more and more different new kinds of things probably appearing in front of us. And as a business, we need to be agile in taking the right decision, ensuring bringing in products and services which helps and aids the MSMEs to drive their business aspirations more. Volatility will come with its own risk, but we need to ensure that we have well laid out risk management positions to ensure that we deal with this volatility. Of course, ESG becomes an extremely important lens to be put in. As our suppliers try to grow, we want them to be a responsible citizen as well. With that, may I hand over the session to Arnav. Thank you, everybody. I really enjoyed anchoring this.
Thank you, Mr. Soumik.
Thank you so much.
Thank you, Mr. Goswami. Just before everyone leaves us, just one particularly 2-point, Mr. Kaushik Brahma was listening to the entire conversation, who is the co-chairperson of the International Trade Committee and also the head export planning and documentation, Tata Steel Limited, along with Saurabh Datta, our chairperson, who is industry sales and marketing.
So, on a lighter note, I was having stalwarts listening to me, and I hope I did justice to that time.
No, great. It was a very engaging session. Mr. Brahma wanted to thanks to HSBC for partnering the first blockchain transaction out of India. Tata Steel had done that. The second, Tata Steel still have a long, Tata Steel feel that he still have a long way to, adapting e-documentation, particularly for India. And many customs and statutory bodies will still demanding wet signed docs for release of goods, and we need a greater push to go paperless. We are ready to participate. So paperless documentation is still a long way to go. It's a good start, but that's one thing. Just before I round up the conclude the session, uh, just a one-liner from everyone, that if you want to change one policy which will or adopt a new policy, what would be the one-liner that you want to state to the central government which will boost the export of the country? From, I would start with Miss Runa Bakshi. A one-liner, Miss Bakshi, what exactly you want to change or adopt for the policy that we can recommend to the government? A one-liner from Miss Bakshi.
I think I would just say there has been a lot of work on increasing the transactional ease for exporters and importers, and I think a lot of great work that's been done. Perhaps just in terms of moving beyond banks and financial institutions, we need to integrate other players who are in the sort of journey, and I think Mr. Kaushik Brahma alluded to it in terms of the e-documents being acceptable to customs, etc. I think that is something there is a need to solve it for making it much easier for our SME exporters and importers to do more trade.
Thank you, Ms. Bakshi. Over to Mr. Shivakumar.
Yeah,
Sir,
hi.
a one-liner. You are the policy maker. What would you'd like to change?
Yeah, while there's immense opportunities for exports, many Indian companies are still contented with domestic, thinking that there's a huge potential within India itself. We have to encourage Indian companies to go overseas. There are risks involved. A government should have schemes to mitigate that risk. Volatility will be there, risk will be there, but huge opportunity is there. Introduce products which mitigates the risk and makes more Indian companies related to overseas markets.
Excellent. Mr. Singh, from the guarantor side, what would you would like to change the overall, which will boost the Indian exporter if you are the policy maker?
If we are talking about tomorrow, then the initiative of the government, this one district, one product, is an excellent program, and over a period, if it continues, then the government will be extending it to other districts. So if the program in its advanced stage will give the result that everywhere exports will be taking place. So rest of the things will get aligned with it. So in fact, whatever contributions or awareness we need to do about this ODOP, we should be doing, because this will result after 5 or 6 years. Results will come in after 5 or 6 years. This is a initiative which is under process, and we are confident that once it is extended to all over the country, then exports will boom. Thank you.
Thank you, sir. With this, we conclude the opening session of International Trade E-Conclave. We are extremely thankful to all our mentors, Mr. Timid Baran Chatterjee, Mr. Saurabh Datta, and Mr. Shomik K. Goswami for wonderfully moderating the session. A special thanks goes to Mr. Runa Bakshi, Mr. T.D. Shivakumar, and Mr. Anand Singh. Despite of their busy schedule, they have joined, and we have noted down your points. While we will be preparing our proceedings, we will share the proceedings with you. And we are thankful to all our sponsors, and we are definitely thankful to the audience. We'll be coming back soon at 12:10 sharp. We'll be discussing on Indian port infrastructure, the facilitating pillar of international trade. Thank you all.
Thank you, Mr. Arnab.
Thank you, everyone.
Thank you
Have a
so
nice
much.
week.
Thank you.
Thank you.
Thank you all. Bye-bye. Very nice.
Welcome back again. We are having our guest of honor, Mr. Ashish Kumar Bose, the Deputy Chairman of Paradip Port Trust with us. We'll be talking about Indian port infrastructure, the facilitating pillar of international trade. The session will be moderated by Dr. Vivek Roy Chaudhary, member of the International Trade Committee BCCNI and Professor of Economics and Trade Policy, Indian Institute of Foreign Trade. Over to Dr. Vivek Roy Chaudhary.
Okay, thank you, Arnab, and all the dignitaries in the panel, and my all the participants who are there. So it is indeed I will say that one of the most important events within this e-trade conclave that we are having here, because of the fact that international trade at the end of the day is not only related to the policies that are taken at the central level, which we come to know from the trade policies, but also ultimately at the ground level, how it is being handled. Like already we were having a discussion, and we found how very able port management can help to export a lot. And so there is no doubt about the fact that port infrastructure, port efficiency is one of the major ingredients in making trade happen. And it is not only exports but also imports. And second thing is, if you look at recently, we have already reached a historically high level of exports, and we are targeting $500 billion in 2023. The government is targeting that. And this target, I think, can only be met if we have a very, very efficient port system. Because if you look at the other ports which are there all around the world, so they are and the countries who are involved in international trade, not only as direct partners, but also indirectly as transshipment basis. So the port efficiency is playing a major role. So from that point of view, we are very fortunate today to have Mr. Ashish Kumar Bose, and he is also a very dear friend of my colleague, Dr. Dipankar Sinha, who is I'm fortunate to have as my colleague. So I came to know about a lot about Mr. Bose from him. So he's the Deputy Chairman of Paradip Port, as already pointed out by Arnab, and he was the Chief Traffic Manager in JNPT. He was the Traffic Manager in Marmagaon Port, and he joined KPT, I think, in 1986. And so we have a really, a very, very knowledgeable and also one of the, foremost experts of, ports with us to discuss certain issues. So, sir, so if you want to give some initial remarks, you can give, and then we can maybe then go, one by one to the topics we have planned. If you want to give some initial remarks, sir.
Yeah, thank you very much. Good afternoon, everybody. So, Professor Vivek Roy Chaudhary, Mr. Brahma, and all dignitaries present, good afternoon to you all again. I would just like to touch upon a few things. Like I will start with economy, national economy. So, we all know that today top 10 ranked nations are constituting 70% of the world economy. That is the present world economy of $100 trillion. The top 10 nations and our country's position presently, we are having $3.3 trillion economy. So present position, maybe we are sixth in the world today after United Nations, China, Japan, and of course Germany and UK. So I would just would like to give some background that last year, FY22, when we ended, our economy was to the tune of $2.7 trillion, and the total port traffic was 1,324 million metric ton. So out of that, maybe 720 million metric ton was handled by major ports, 12 major ports of the country, and rest almost 600 million tons was handled by non-major ports. So if we consider our economy to grow to $5 trillion, which is the target given by our Honorable Prime Minister. So there, with this, if we see that 2020, whatever economy was and our traffic volume was, we were growing by, traffic was growing, international cargo was growing by 1.1x. So we need to handle by 2026, if we touch 5 trillion economy, then we need to handle 2,500 million metric ton. That's the very conservative figure. And if really our cargo, our import-export grows with the country's expectation, then maybe we have to handle 3,000 million metric ton. So if we just see the container handling, container traffic scenario, in China, when China handled 16.7 million TEUs, which was 245 million TEUs in the year 2020, when their economy was $14.7 trillion economy. So that's 16.7 multiples. Whereas in our country, with $2.7 trillion economy, we handled 16.5 million TEUs, which was only 6.6 multiples. So even we consider that with the India's manufacturing and agri push, it will propel the growth of containerization. So our traffic is going to be 10 multiples of economy. So considering that 10 multiples of $5 trillion economy, we need to handle 50 million TEUs. So if we consider that, we need to have capacity, because last year, as I mentioned, 1,324 million metric ton when we handled, we had a capacity of major and non-major port combined together was 2,500 million metric ton. So if we need to handle 2,500 million metric ton in 2026, so then by that time we should have 4,200 million metric ton capacity, because as per international scenario, we are supposed to handle, we are supposed to have, utilization factor of 65% maximum, 65 to 70% berth occupancy. So considering that, otherwise there will be a huge detention of vessels. So considering that, we have to have a capacity growth also. So I would just like to touch upon 8 key enablers which are important for improving logistics in port sector. Number one is port-led industrialization. So most of the ports now started monetizing their land by allotting it to the industries which are port-based industry. So that will certainly give a lot of boost to the industry, because the logistic cost will certainly come down if it is adjacent to port. Then capacity augmentation, of course, is one of that. As I mentioned, we need to augment our capacity. Alternate mode of transportation is another enabler, because today for aggregation or evacuation of cargo, we always talk in terms of road or rail movement. We need to explore the waterways also, which is the cheapest and of course environment friendly. Onshore modernization is another factor, because today, previously we were handling mostly manual mode of operation. Then we went for semi-mechanized, like putting mobile harbor cranes and payloaders, dumpers. But we need to have a totally mechanized solution, so that we can have, that will be environment friendly as well as faster mode of handling, as well as the cost will also come down if we go total mechanization. And the best part is of that mechanization is limited loss of cargo, because if we do if we handle more and more manually or semi-mechanized, the cargo loss remains there. So with full mechanization, cargo loss will certainly go down. And of course, leveraging technology is one of the most important factor today. Thereafter, draft enhancement, because most of the ports today having restriction in drafts, we are very few ports in the country today are in a position to handle Cape-size vessels as far as bulk cargo is concerned, or for container or for liquid cargo also VLCCs need to be handled, for which draft enhancement is necessary. And of course, whatever development we are carrying out, it has to be green and sustainable operation, and seamless connectivity is, of course, the main factor here. So I would just like to mention a few more game changers in Indian port sector, like the issues which initiatives which we have undertaken by Government of India. Like one is Major Port Authority Act 2021. It has certainly given a lot of greater autonomy to all major ports and professionalism in port sector. I would just like to quote one example. Like today, previously we had a body called TAMP, Tariff Authority on Major Ports, who used to determine the tariff for all major ports. Now we are free, we are out of TAMP, and all the ports can fix their tariff themselves with the help of taking it through, approving it, getting it approved by their respective board. The next is Sagarmala Program 2015 to harness the economic potential of India's coastline. 802 projects worth 5.41 lakh crores in port sector has already been earmarked, and 172 completed projects, 235 under implementation, and 395 under development. So this Sagarmala program has certainly given a lot of boost. Then Maritime India Vision 2030. This blueprint envisages overall investment of 3.3 lakh crores in port sector. And we have taken, I will come a little detail about Maritime India Vision 2030 later. National Monetization Pipeline. This is again another very good initiative which is meant for infrastructure investment of 6 lakh crores over 4 years period up to 25. And 32 projects at the rate of 32 projects has already been identified in port sector with an investment of 12,828 crores. Then next is very important PM Gati Shakti Master Plan. This also I would like to discuss a little bit in details. That integrated planning and execution of projects to address the issues of multimodal connectivity. Today we have 101 port projects worth 59,930 crores has been identified under Gati Shakti, and this I will discuss a little more later. And then last one is National Logistic Plan Policy, which recently Prime Minister has launched. So this has also given a lot of boost to the port sector for reducing the logistic cost and boost ease of doing business. So as far as Maritime India Vision 2030, which I was trying to mention, that here 150 initiatives has been identified, and out of that 50 initiatives are only on IT related issues. Here the ports were asked to make world-class infra, ease of doing business, logistic cost reduction, reforms in institutional, regulatory and legislative, safety, sustainable and green sector. These are on the port sector. Shipping side, Atmanirbhar shipping, shipbuilding repair and global stature enhancement, and waterways promotion of cargo movement, particularly coastal traffic and inland waterways. So as far as PM Gati Shakti National Master Plan is concerned, there 16 infrastructure related ministries has been roped in, and 7 driving ministries of logistics like railways, roadways, ports, waterways, airports, mass transport logistics infrastructure, they have been roped in for giving a Gati Shakti a real boost. And this is also made operational through Visagen, where 200 plus layers are identified, and one can go to that site and see what all is being developed. Because previously what was happening, all these ministries like railway, roadway, port, they were developing in silos. Like one port is developed, but there was not proper connectivity, proper road, rail network was not there. So naturally this was causing a lot of hindrance to the ports development. So now all these have come under Gati Shakti National Master Plan. So this will certainly give a lot of boost in as far as and thereafter government has asked to go for Amrit Kal Vision 2047 in Indian maritime sector, aspiration of 2047. There also 11 overarching themes has been identified with 300 plus initiatives. So I thought I will just give a brief background about the ports development and ports initiatives. And of course, whatever development nowadays is taking place, that is certainly we are considering green maritime sector as one of the main part for it. And for enhancing the model share of coastal shipping, also a lot of initiatives has been taken. Like 1300 million metric ton coastal cargo is supposed to be handled by 2047. For that, number of initiatives has been taken. And the best one was Eastern Waterway Connectivity Transport Grid, as we are in eastern part of the country. So this India, Bangladesh, Nepal, Bhutan, Myanmar, this transport grid is being talked about and is being developed in a very on a faster mode. So these are the initial thought I would just like to share with all. Thank you.
Thank you, Mr. Bose. It was really wonderful. I mean, we had sent some pointers, and I think Mr. Bose has adequately covered all of them, and much more than that. In fact, whatever we had actually, asked him to speak on, and he has given a very, very comprehensive view on what are the initiatives and what are the requirements, what kind of capacity building is required. Then he had mentioned about the 8 enablers, and also he has mentioned about the 5 or 6 game changers in case of port and in general for logistics. And so which is basically, as far as we got from him, what I think is that it is not only the efficiency of the port per se, but it is also all the other linked logistics parts which are very well that should be looked at to develop the infrastructure for trade or trade facilitation, and which also includes road, which includes internal inland waterways, and which also includes integrated logistics policy. And now India is has the presidency of G20. There is also a logistics as a part of G20. So, my question to Mr. Bose is that, sir, given that now India has assumed the presidency of G20, and there is a huge logistics part also which is being spoken about there. What are your views on how should India, basically place infrastructure or port infrastructure as one of the major enablers for world trade?
So basically, as I mentioned, that considering the presidency given now is with India for G20 countries, we are very, very hopeful of going ahead with all the plans, all the initiatives government of India has taken. And as I mentioned, all these will certainly depend a lot on Maritime India Vision 2030, which is a little medium-term planning. And also, as I mentioned, Amrit Kal Vision 2047 we have gone for, there also we will be coming out with the policy. Government is coming out with the policy of 2047 very soon. So considering that, as I mentioned, that 150 initiatives has already been earmarked in Maritime India Vision. Out of that, 50 initiatives were on IT issues. So that is one of the area which we are seriously, all the ports, particularly major ports, who were little lagging behind in IT initiatives over, if we compare with non-major ports, we have taken all initiatives to go for it. As digitization in Indian ports have improved the port operation in terms of lowering turnaround time, increasing berth productivity, and reducing inefficiencies. However, you will appreciate that in today's context, any importer, exporter would not like to go to a port where we don't have all these IT initiatives. So considering that, the problem today in the major ports, what we are facing, that whatever initiatives we have taken, all these are in silos, whether it is ERP or terminal operating system or port community system, they all have been developed, but they don't communicate with each other. So lack of data flow between these systems make it impossible for real-time event tracking or capture promptly the billings of items in case any changes in the event or customer behavior. So considering this, now we have taken the main benefit of digitization can be seen how it is lowering the overall transaction cost by allowing real-time data flow between the parties. So that's the reason Ministry has already gone for NLP Marine, National Logistic Portal Marine, which will certainly be integrating all these systems, and also the ULIP integration is one of the initiatives which we have gone for.
Thank you, sir, for your answer. And so I think the participants can also, I think later on they can also interact with sir maybe through chats or
yes, whatever question that we will be coming, we will collate. We will be in touch with sir also, and we'll be coming up with a detailed proceedings.
Okay.
And we are really thankful to sir because sir has joined within. There is also with some personal problems sir was facing due to some health issues in his family also. But still, sir has joined. We are really indebted to him. With this, we conclude the session on Indian port infrastructure. We are immensely grateful for our guest of honor, Mr. Ashish Kumar Bose, to kindly join us, and also Dr. Vivek Roy Chaudhary to wonderfully moderate the session. Thank you, sir. Thank you.
Thank you. Thank you very much.
Thank you.
Thank you, sir. Thank you.
Thank you all.
Welcome back to International Trade E-Conclave. We have completed the opening session where we have set the tone of the deliberation of today, and then we have discussed about strategizing trade finance, and we have also talked about the port infrastructure. Now we are having the session on experts roundtable on sustainability factor, the age-defining new era of capturing global markets. The session will be moderated by Mr. Kaushik Brahma, co-chairperson of International Trade Committee BCCNI and head export planning and documentation Tata Steel Limited. We have very eminent discussions with us, Mr. MC Agarwal, ED Sales and International Trade Division SAIL and Chairman Metal Junction Services Limited, and Mr. Shomesh Vishwas, Chief Corporate Sustainability Tata Steel Limited. With this, I hand it over to Mr. Brahma.
Very good afternoon, ladies and gentlemen. It's a pleasure to be back with you all again. Agarwal Saab, good afternoon. Interacting with you after a while. Good to see
very
you.
Good afternoon.
Somesh, good to see you across a video screen instead of face-to-face as we normally do.
Yeah, hi.
Thank you for sharing your time with us as we talk of a subject which is very close to the heart, to start with Greta Thunberg, but now close to the heart of every industry going forward in the world. Sustainability and how to make the world a better place to live in spite of all the industrialization that we are currently doing. So there is an ongoing debate about the extent and desirability of integration into regional global value chains, the benefits associated with the wider participation for developing countries. So to my panelists, is global value chain helping the sustainable development goals? May I request Mr. Agarwal for his comments, please? And I'll follow it up with your comments, Somesh.
Yeah, before, very good afternoon to Mr. Kaushik and Mr. Somesh, Sarnav and all participants. Before I go to that global value chain and the benefits coming to the India based on that, it's ultimately now my discussions will be mostly restricted to steel industry. So based on steel industry today, we see that why we need the global markets. I'll ask basic things to start with. So why we have the global markets to us, because for sustainability of our country's demand itself. In case we need it, we need import also. And why we need export? Because anytime when you want to complete your requirement of your own domestic requirements, you need to build up your capacities. And capacity build-up cannot be equivalent to what domestic industry is looking for. So anytime you have to plan for next 5 to 6 years time, your capacity build-up. And the moment you build up that capacity, the same thing will not go domestic market, you need export market. So ultimately that export is required, though what question you are raising, the global value chain. Because basically we are also now looking in the country how we have to add our values in the system, and then more so now today people are looking for that greener side of it. So ultimately the European countries and other countries where this investment to the sites are already going on, but this is more and more difficult to both countries, both things, that is China and India, where I think this is going to be very difficult and Hercules task to go for that, the challenge which is now primarily coming to the country. Second part, in fact, there are a lot of countries which are looking for de-risking from China. So that definitely help us India to go for more of exports, and definitely in case we have value chain available in country, so this will help us the country also to go for more of exports in the coming markets. Now, in case we look the capacity, in case we look the parameters like capacity building, now everybody must be aware also that now country is looking for a build-up of almost 300 million tons. But if we stock moderated also around 230 million tons of capacity in the country. And definitely this, if you look at the 91-92 when it was 22 million, today we are already at 150 million. So it is an achievable task. And next 5-6 years itself, we are going to add 30 million tons of capacity. Almost a, you can say investment of $25 billion. So this is a very big industry for as far as investment is concerned, infrastructure. So whatever value chain we add in our country, this is going to help us in countries big way.
Thank you, sir. Somesh, your opening remarks, please.
Kaushik, can you repeat the question, please?
Okay, so what we were saying is that the ongoing debate about the extent and desirability of integration. So do you think the global value chain is helping the sustainable development goals?
Yeah, Kaushik, it's a very important question. Thank you. So the 17 SDGs, so as to say, which have been taken by each 195 countries across the world, and the countries has taken targets on 169 targets. And the targets are very important, and it comprises the well-being of the human being and the planet as such, the total planet as such. And not only the countries have taken ambitious targets to reduce, but also the corporates. And each individual of us should have actually take targets. So in Tata Steel, we have prioritized the 17 SDGs and 169 targets, and we have identified which are the SDG goals we can actually impact in the area of our operations, and also the targets that we can, which are relevant to us. Certain things we cannot do, so like justice to all. Huh? Okay, we can't do anything much about it, so we have deprioritized it. Targets where we have taken, we have linked with our corporate strategy. In the sense, we have strategy objectives, strategic enablers, the initiatives, and the outcomes. It has been totally linked so that we can show our impact on the even SDGs to our investors, to the global community, to the I would say rating agencies, and it's very important that whatever we do, it actually benefits the community and the society and the, I would say, the planet at large. So whether it is climate change, SDG number 13, I suppose, climate actions, we have taken actions across the value chain, how to reduce CO2 footprint, and we have taken targets to reduce intermediate targets of say FY25, then FY30, then net zero ambitions by 2045, and it is actually, I would say, mandated by different types of global think tanks, whether it's IEA or it's SBTI, Science-Based Target Initiatives. And in future, we see that there will be a lot of pressure on the corporates to be, I would say, keep in mind the UN SDGs to achieve. And when we talk about global value chains, it's very important to understand the not only the from iron ore to the total end products. Okay, the whole value chain is very important, whether and including the logistics parts and logistics, manufacturing, everything. So here, when we talk of logistics, then we talk about say how to become net zero in logistics also. Okay, when we talk of production, how to become net zero in production in terms of water, in terms of clean air, CO2. So all corporates has to be taken into account across the value chain. When we use talk of energy, it cannot be fossil fuel, it has to be renewable in terms of hydrogen. So the ambition of integrating the value chains with our ambitious targets so as to, in a way, impact the SDGs are very important. And every corporate should do it, and every individual, we as such. So if we are, say, for example, as such in the sense, we, how it could be. So if we believe in consumerism, say, for example, we change our cell phones every year. So in that case, we're actually creating carbon footprint, right? So how to use more of durable products in our lifestyle, how to be more sustainable in our lifestyle is very important in our thought process. And it's not only the corporates we talk about, not in the economy, we also play a part in achieving the SDGs. These are my initial thoughts, Kaushik. We'll discuss further. Thank you.
Thank you so much. Thank you so much, Somesh. Drawing a line out of what Mr. Agarwal mentioned in his opening comments, we are expanding. We are expanding our capacities, therefore expanding beyond our marketplace, and therefore the global market, which is now within our reach due to internet and availability and contacts across the e-forums and platforms. So exports, and that export portion of the activity becomes equally important, in spite of the fact that we have a huge demand in the country, for consuming the goods that we produce, still export forms an important factor. And as you said, the 17 SDGs to be adopted by countries worldwide. 195 of them is what you mentioned. So international trade can bring prosperity, but potentially also create negative social and environmental consequences. Both of you are stalwarts in your area and you've seen it in front of you how it happens. Do you think we are able to shift our focus towards sustainable development from just profit making? Somesh, would you like to carry on with your line of thought? I'll come to Mr. Agarwal thereafter.
Yeah, it's an important question, Kaushik. So coming to your, the per capita consumption of steel that we have in India between 70 to 80 kg, and we are forecasting on 150. So the steel production will go up to 300. And then government of India is already talking about 500 million ton by 2047. But this growth has to be there to fulfill our nation building, our infrastructure building. And these growth will come not only, so it come in lumps, I would say. The capacity when it comes in lumps. And means 10 million ton. If you see by 2050, it should be 500 million ton, then every year we'll be adding 10 million tons. It's a huge capacity. But the demand will not grow in lumps. It will go exponentially every year, some 8%, 10%. Most likely it will be more than GDP in for future compared to less than GDP growth last few years. If it comes in, say, exponential growth and not in lumps, then in that case, the exports market becomes important because we cannot produce and keep inventory, right? We have to ventilate and send it to exports markets. And then when the demand grows, we'll again switch over to domestic markets and fulfill the requirements over here. So the exports markets are very much important for our growth. It cannot be we cannot be isolated from exports market. And to be a player in the export market is very important to keep our eyes grounded to a ESG, environmental, social and governance aspect of every corporate. We in Tata Steel, we have a debt of around 70,000 crores and we are very dependent on our investors. And investors these days are very, I would say, aware of ESG ratings of every company. And in that case, the rating agencies, whether it's Dow Jones Sustainability Index or Morgan Stanley or Sustainalytics, these ratings are very important, has become very important for the corporates and to keep the interest lending rates down and to keep our responsible. We are corporate responsible. Show to the world that we are corporate responsible. Otherwise, when if a company who are not good in ESG, then it will be very difficult in future to export. And customers worldwide, when they are coming to Tata Steel for purchase, say in Europe, say for example, the discussion that are happening with the Tata Steel Europe team is when you will give them the auto players asking when you give them net zero steels by what? They have their own ambitions of 2035 somebody, so they are requiring 2035. They want the net zero steels. I would say some names like IKEA also came to Tata Steel India and they want a net zero steel from us. Schaeffler, a German player which have some auto ancillaries, I would say plants in India, came to us and want to understand our ambitions of net zero. So if you see going forward, it's very important. And say for example, the carbon border adjustment mechanism, which is talking about in the Europe, it is also about our ESG in a way. So if we are controlling our environmental footprint, we will be better off to export. And the corporates who are actually taking action right now, because India has set the net zero ambitions of 2070 compared to a world requirement of 2050. Or IEA has actually said that if we don't achieve net zero by 2050, our 1.5 degrees centigrade, limiting the global temperature increase by 1.5 degrees centigrade at a baseline of the pre-industrial era will not be possible. But 2070, if we don't if the corporates are not taking most ambitious target in any way and intermediate targets, then we'll also able not to export to these economies. will we have to export to Africa where the demand has not grown? We have to other Southeast Asian countries, and also other geographies. China place will be not able to export to Europe. Will export in dump steel in Southeast Asia. The price will go down, but the price in Europe will be higher, much higher, because CBAM is there. The taxes are increasing, and if I see 177 million tons of European steel is being produced. Out of that, till the announcement, only 50 million tons have been green hydrogen-based, DRI versus steel. So 120 million tons of still blast furnace capacity is there in Europe, and they have to pay allowance. The allowances are reducing. They have to buy allowances or they pay the taxes. And by FY32, what we understand that the allowance will become zero. So if we are able to produce at a lower carbon intensity and we export, we get a higher margin. The CBAM is actually favorable to us. In a way, it's not a risk, I would say. It's not a transition risk. It's where we have the corporates who will do it earlier, will have to convert the risk into an opportunity. Also in India, because Government of India is talking about, there's a Ministry of Power, under the Ministry of Power, the Bureau of Energy Efficiency has already brought out a report in October about the implementation of the compliance market, okay, carbon energy compliance energy market, then carbon market, which is actually taxing, I'll say, the pricing the carbon emissions, and also the voluntary market is there, in which actually the projects get extra carbon credits when you have revenue credit. But these indications are that the carbon pricing will come in India, the emissions will be priced, and whatever is the value, and the value has to increase over the years in line with the other geographies, because there will be pressure on the Indian government. So in a way, I would say finally that the corporates will act faster, will be able to export better and earn better revenues compared to laggards who will not take action and just keep satisfied, thinking that it will happen in future. Nothing to worry right now, may face problem in future. Thank you, Kaushik.
Thank you so much. Agarwal sir, we've been patiently waiting. Your comments on the question, please.
Yeah,
Do you
thank
think
you.
we are able to shift our focus towards sustainable development from just profit making?
Yeah, thank you, Kaushik and Someshji. I think given a lot of inputs on this subject, but I'll just take my opening sentences and then now taking forward Mr. Somesh's word also. Definitely, we need the steel production capacities to go up in the country, and that already country is in course now. The major challenge which is going to come and which has been coming, but although there is no second thought on all corporates and every steel producer to start thinking and seriously thinking to how to go for a sustainable steel and that can be exported. Definitely today carbon tax is not very clear, but it is not going to be very far. It is going to be reality soon. So these all things will come, but at the same time, one question which I think country has to address also, this process of the BOF production, which is today is 50%, and the way we are looking for this enhanced capacity, it is not going to be less than 50, it is going to be more than 50, it is going to be 55%. And until unless everybody start looking, all corporates, how to reduce the coke consumptions. And like even today, we talk, we have reduced that CO2 emissions maybe from 2005 to today, hardly 16%. But today also even it is almost 2.6 tons per production per ton. So it is something very, very high. So definitely I take words from Somesh. I think everybody is now working and everybody has to work also, not for maybe for the world market or the world has to ask us to do all these things, but for a human being also. These all things has to be thought of. And I think there's a lot of initiative. One initiative I talk, the Tata Steel, again has taken, that is scrap the plant looking in North India. That is also something which one has to look, and everybody is now started looking. But then our age of steel is not very, very high. It is very small now. So again, going on a scrap base, you need almost 100 years of that same capacity. When I was talking 91, we were 22 million. Today we are 150 million. So hardly we have any age. So that is again challenge. So these are the few challenges. Not only this, even adverse cost in the country to the tune of almost $80 to $100 with different parameters is also a major challenge for export. But it's a reality. We have to, the production has to go up. and it has to go up maybe continuously or in lumps, whatever form. But anytime the demand will not commensurate what we start including the production will go up. So anytime you need the export, and to have that sustainable export, we definitely has to work. Everybody has to work towards the greener energies.
Thank you, Agarwal sir. Arnab, as you can see, the subject is extremely close to the heart of the two speakers that we have today with us. How are we doing on time?
Since after this there will be a long break, so we can carry on with the time.
Fantastic, fantastic. And it's very interesting to hear our speakers speak because they have so much of experience and knowledge. Sharing it with our audience today, I feel that will be a hugely knowledgeable session. As we talk about steel and manufacturing of steel, a word which comes up very, very, very importantly is the raw materials and therefore the mines and the mining which go with it. So for bidding in an auction in mining, especially in India, we often have observed abysmal lower quotations, and there is a tendency to keep the labor payment much lower to remain competitive in the global market. Would you consider this aligned with the larger goal of sustainability development goals, SDGs, that has been alluded to a little earlier? Do you think it's the right way to go about procuring raw materials? Somesh, would you like to start?
Yeah, thank you, Kaushik. It's also a very important question, and it's about just transition, because transition has to happen, but it has to be equitable to everybody. That's why it's just transition, and we require growth, and we require growth, not a growth like I would say treading over the corpses of others. You know, it cannot actually reduce or actually reduce bring people to poverty or something like that. So I would say the government because I was in raw material strategy earlier to my stint, and I have actually participated in 5 auctions. So it's iron ore auctions I have participated in, and also coal block auctions and chromite auctions. And to tell you the truth, the government of India's position about auctioning natural resources, to my heart, it's not right in a way. Okay. Because it's becomes a winner's curse. Winners want to bid higher in order to retain the assets. In a way, they are actually reducing their cost to below the theoretical limits in a way, to pay the revenues and royalties, and that will increase the price of cost of raw material. And when you pay the bid premium over of it, the mining cost, the bid premium, the royalties, which is the DMF, District Mineral Foundation, the NMAT, National Mineral Exploration Trust, and all the taxes when they give, the cost of raw material will be very high. What will happen? It will actually increase the cost of raw material, and we will lose our competitive advantage that we have as a nation. Our cost of raw material has been lower. We are the cheapest steel producer, so as our only problem was transportation cost, which is one of the highest in the world, and also the interest rate, because we are a developing economy, a growing economy. Our growth rates are higher, interest rates are higher compared to the Chinese market, which is interest rate at less than 5%. So our need to post higher profits is much higher, because interest is higher means we have to have more profits than our weighted average cost of capital. Otherwise, the banks will not give us money to grow. So this is a total story that is there, that you cannot increase raw material cost, and that will actually translate to increase in steel prices, steel cost, and the price determination is actually based on the marginal cost player, whatever is the commodity. If the marginal cost player, which are the largest, which are buying raw material from the market and producing steel, they will have a higher cost. Then automatically the steel prices are higher. Now what it happens, it will increase steel import opportunities, because others are producing at lower cost, steel will come down. In a way, it will kill our raw material market finally, because raw material demand will reduce, automatically raw material thing is reduced. So I would say as a person, I don't agree to the point of auctioning of raw materials. But given the point that the auctioning has happened, and we are actually reducing our cost to threshold levels, and what is happening is that no company is doing mining on their own. They are talking about mining developer and operator, MDO. And MDOs are supposed to actually bring in competency and actually managing number of assets, having a higher utilization of HEMM, and it's a heavy earth moving machineries, having more productivity of the manpower. So in a way, when we give our contracts, it's very important that we don't throw peanuts to monkeys. If you throw peanuts, small prices, the monkeys will come. So you have to have a realistic way in our pricing also, so that it guarantees our sustainability, it guarantees our safety efforts. Because in Tata Steel, we cannot jeopardize our safety, whether it's contract mining or we are doing our own. So it's very important when a corporate actually is evaluating a mine, they think about these parameters. And the Indian government also has come up with this rating, star rating of mines. So if you actually have threshold cost and actually doesn't fulfill your sustainable goals of having, say, renewable energy, having water conservation, so all those things, or safety, all those things are not taken into consideration at the start, then what will happen? The rating of the mines becomes lower, and the mine automatically at the last will go away, will be taken away by the government of India if it is consistently beyond 4 and 5 levels of star. So these are very important parameters, and as such, in the auctions, proper auctions valuation, actually, the corporates need to take all these into account in their valuation assumptions. And these assumptions are very important. Thank you, Kaushik. Sorry, it was a big long answer.
Thank you so much. It's so much of information. Coming to you, Agarwal sir, your comments on the question.
Yeah, thank you. I'll just take it the discussion forward from Mr. Somesh where he's ended. Basically, raw material steel, you can see there are two major raw materials, that is iron ore and coking coal. Now we have plenty of coking iron ore available in cutting, maybe that Fe content may be less, and then all these issues what mining Mr. Somesh has said, that is continued. But at the same time, let us not forget a subject where the coking coal has to be imported only. And the quantity is very high. The moment you go for a production capacity of say 230 million or 260 million tons capacity, you need almost similar quantity of the coking coal to be imported. Your coking coal is going to be almost 250 million tons again. So where is availability? Is available, maybe outside country only is available, but then even outside country, if you see nowadays, I don't know whether this has been noticed by so many people, but now there's nobody in the outside country also is now that labor, which you were talking, Mr. Kaushik was talking, the labor, nobody is now allowing their children to go for a training of laborer outside that in the world market in KC. So number of laborers available for the mining itself is getting reduced. So the moment you reduce the number of laborers, whatever is available, you have to go for a overtime. Now that working has to go up. Now, in recent past, you must have heard there was a lot of strike. They will not work whatever has been allowed. The timing 8 hours, 5 hours, whatever is there, they will not work more than that. So availability as such, even having available, whether who is going to mine it. The same thing in case you extrapolate to the India also. Ultimately, it has to come. The people, the laborers has to be trained, and how the laborers will be available in coming time. That is also a subject, basically more of auction. Auction, there may be anomalies, all these things, but that can be sorted out. That can be manual, and that government can take bid. But how we'll sort out this? Basically, the laborers availability, whether it's India or outside. So going for production more, availability of raw material is going to be a major challenge, which I was just talking. Adverse cost, other than adverse cost, this is a major challenge which is going to face, particularly as sale. We understand maybe slightly less at Tata, but at least we are facing a lot of this raw material availability of coking coal, and this is a major challenge. So definitely I take it forward from Somesh.
Yeah, so Kaushik, just 1 minute to sharpen this. Very important nuances I want to see. See, China doesn't export coal at all. It's actually it is actually reliable on coal. It's self-sufficient, but it imports 60 million tons steel. But it imports around 1 billion tons of. It produces 1 billion tons of iron ore. But low-grade iron ore, and imports 1 billion tons of iron ore also, because low-grade iron ore 1 billion tons. They beneficiate to 300 to 400 million tons beneficiation. They have the technology. We have very high low-grade iron ore, but we don't beneficiate, because the price between a low-grade iron ore and a high-grade iron ore is, the price ladder is not sufficient to have beneficiation, reverse roasting, grinding, beneficiation, reduction roasting, all these processes cannot be accommodated with the price ladder. So in India, it doesn't happen. We are actually mining high grade ore and our low grade ores are keeping in the iron ore, in the mines. But we have low grade coal, but we don't beneficiate. Okay, because it is easier to import from Australia. China didn't do so. China, without iron ore, they have taken a strategic decision that they will consume their ore first. They will bring the value. Otherwise, Chinese could have imported the whole 100% have to import the coal, iron ore. So in a way, I would say the boon of having a high grade iron ore has impacted our beneficiation. Okay, but the coal is not so. The coal, we don't have coal, but we are not beneficiating. Majority of the reasons, I would say personally, because of Coal India. Had the mines been with somebody else, the beneficiation could have been better in a way, I would say. But this is an important point what Mr. Agarwal has brought into it, because we have to be self-sufficient in our raw materials, whether it is blast furnace raw materials and iron ore going to ultimately DRI, DRI melter, or scrap, because Government of India, 1st of April 2023 onwards, the private vehicle scrappage policy will be there, and vehicles which are more than 15 years are not fit for say roads will be scrapped. So we have to have deregistration in place. We have to have dismantlers in place. We have to shredders in place, because there will be a lot of amount of scrap that will come out, and those scrap has to be used. In Tata Steel, we have been buying scrap so far. Last 3 years back, we never bought scrap, but last 2 years we have been buying scrap to reduce our carbon footprint. And we have internal carbon price to make it justify the investments, because we have taken some external commitments to do so. Yeah. Sorry, Kaushik. Maybe time.
Yeah, but I'll take one minute in continuation of Somesh, because nowadays that earlier that fines we never used to bother, but nowadays I think all producers started, particularly say we have started bothering now. Fines should be pelletized, should be used.
Yes.
And earlier we used to say raw material is available. Now say raw material has to be procured, and means particularly is kept, and whatever you are getting from outside, that also you take it. So I think China is following that. I say they are self-sufficient, but still they are importing coal. They are importing. Why they are importing? They are importing because whatever is available, let us take it first.
Yeah. And also because these Chinese are actually spending so much money in beneficiation, $100 to $150. Yes. That's why they are the marginal cost producer in the world, and they are the price setter. The prices are, I don't know why $200. Yes. It's because the Chinese miners are there. If they move out, automatically the price will come down. So in future, it is a point to note, Kaushik, when the blast furnace technology move and slowly people shift out to scrap, and the iron ore and the coal, they will reduce the reduction prices, because the high cost miners, in terms of benefits, high cost beneficiaries, all these will move out. They will not be there, and the prices is reduced. And that has to be taken into account in our business proposition for our green hydrogen projects, or hydrogen, or any sustainable projects in future. Sorry.
Perfectly all right. So very clearly, as we understand, sustainability and factors which are influencing the market from the sustainability point of view are here to stay, and they are here to be enforced more strongly as we go forward. Arnab, a pointer there is we need to have a full session only on sustainability, and with speakers like the ones we have today, they can take the entire house down with the information that they have. So fantastic. So we'll quickly come to the effect of the sustainability initiatives. If Indian exporters focused more on the sustainability factors, do you think there is a chance of getting more access to the international marketplace? Your focus to exports. Agarwal sir, would you start?
Yeah, I straightaway agree the question which you raised. Yes, definitely, the more sustainability factors you adopt, your export chances are going to be more and more in coming times. Even today, people started talking, as Mr. Somesh was also talking. People started talking. Maybe we may be talking less nowadays, because we are not, we are much behind than what the world is expecting. But I think coming time, yes, definitely, we have to discuss this subject.
Thank you, Agarwal sir. Somesh, your thoughts?
Yeah, so Kaushik, so it will accentuate going forward. So 2030, 2050, it's more, and because these developed markets are a high earning market, right? Although the prices are linked everywhere, but we With developed markets require more of galvanized products, more of coated cold rolled products compared to hot rolled products. And we want to, we don't want to export low end products, right? We want to go up the value chain in terms of exports also. So we have to take into account the export markets potentials, and we have to have our ESGs in place, because these markets will not buy material which are made unsustainably, I would say. And if we can produce really sustainable with say net zero ambitions in water, carbon, then there is a value more than that the market will give. So the pricing, and then you have a premium to attach, because most of these customers in the markets have taken their ambitious targets of reducing scope 3 emissions, right? Because they want to reduce, they want to buy raw materials which are net zero in terms of CO2. So that has to be linked, because they will not buy any steel which is having a carbon footprint of 2.5 or 2.6 ton per TCS going forward. So if we want to export and we want to leverage that market, we have to be very lean in our carbon footprint. And that's the reason is that it makes sense of the government and the whole ecosystem to come in place and strategize and put the infrastructure to do it. It's not that just by talking it will help. We have to do it ourselves, and the regulatory aspects in the country will drive the change. Whether it is carbon pricing, whether it's low hydrogen hub across the value chain or across the producing states, or the say for example coal-based methane, which will help for the transition to hydrogen, or R&D. Actually, the hydrogen we talked about, the hydrogen cannot be injected 100% in the DRI module still, because it's when it injects hydrogen 100% in DRI module of iron ore, it's an endothermic reaction. The hydrogen has to be heated to 1,000 degrees centigrade. You can inject up to 70% or 30 to 70%. So that requires R&D. A lot of R&D is required, a lot of money is required actually to in the transition. That's it, Kaushik.
Thank you. Thank you. And the last line, last question, Arnab, time permitting, can we go ahead? So far, we have talked about the elder brothers, the big brothers in the marketplace, the large corporates. We are looking at a very slow rate of shift of the MSMEs and the smaller industrial groups, which also have a share of their market in the export markets as well as in the domestic market. But they seem to be constrained by availability of technology and finance to shift from normal production methods to more sustainable and green production methods. What do you think we should be doing, or any policy initiatives from the government side? Or you think you have some ideas which BCCI can note down when they're putting up a note to the government for action thereon? Agarwal sir, would you like to comment, please?
Yeah, I think this is a very subject which we are discussing for last 2-3 months, particularly in M Junction. So that's why I was thinking this question which you raised is very much now relevant to me today. In fact, any MSME, in case as individual, they will not be in a position to adopt any new technologies, develop R&D and all these things. So now there's one way we start looking at the government will give some platform, and it was given also. If you remember, there was SRTMI was developed by Ministry. It is still there, and there's an institute available in Mandi Govindgarh. I visited that institute. But somehow that is not taking up that much effect to all MSMEs to give a one platform to help them to develop technology and all these things. And the moment for this sustainability, what we are talking today, is not going to come by alone them. It has to be by some platform. So there is a serious talks which we are doing. Can we have some sort of a platform available with us to help MSMEs to develop all these things? Particularly when we are looking for export, definitely you have to look back some other technologies also. So seriously, there are some subjects are going on other than government platforms also. But this is a very relevant subject, because alone main producers are not going to sustain this goal. It has to be come from steel industries, small industries also. So there I give you right now, but this subject is very much in heart, and this work is going on. This.
Thank you, sir. Somesh, your comments?
Kaushik is very important, and when we talk about just transition, we have to take everybody into account. We cannot just kill them, right? But there's a lot can be done, I would say. So, for example, for steel, if you say most of the MSMEs who are not in steel sector, they're using power. So when the power becomes green, they automatically becomes in a way carbon neutral in a way. So government's effort in making power green is very important. And MSMEs in steel sector, if you say they're having induction furnace, or most of them are induction furnace. And these induction furnaces use what? The power, scrap, or DRI. Okay, these three are the inputs, which are the mains. Power is scope 2 emissions, DRI is scope 1 emissions if they produce themselves, and scrap. So the increasing scrap availability is very important in the country. And country imports 5 million ton, as we all know. But it has a really although Mr. Agarwal has said the scrap has not gone much, but India can have the vehicle scrappage policy implemented very fast, can make opportunities for big corporates to imports also, have the containerization, from ports to the hinterland plants, all those to be enabled, reduce import duty on scrap. So a lot of stuff on the regulatory side can be done. And one of the main thing is greening of the power. And one of the greening, if you see France, there's 70% is nuclear power. But India, nuclear power is not growing at all. We are talking of solar, wind, and wind is not so coastal based, and solar is not so there in this part of the country, east, if you talk about. We have monsoons, we have only 12 hours in daytime, the utilizations are hardly 19%, 17%, okay? If you go towards Rajasthan also, it will go maximum to 26%. So we have taken a target of 500 gigawatt of, say, solar power, renewable power in the country. But this nuclear power has to be harnessed. And the problem when I go to nuclear power is that it's a civil liability bill. Government of India has not taken into account the limited the bill. If a Fukushima happens in India, the operator has to take the unlimited liability. No operator will invest. US want to invest in India. Europe want to invest in India, because once India got under Manmohan Singh, Dr. Manmohan Singh, when we signed the national agreement, there are a lot of investments that are talking about want to put in place in terms of nuclear energy into India. But nobody will sign or put up a plant which is unlimited liability. And with this, no state governments currently wants a power plant in their state. Okay. So this regulation of limited liability has to come in so that the investment comes in nuclear energy. Because the power, if it becomes greener, automatically a lot of stuff becomes, sustainable. So government has lot of role to play, whether it is taxing on the emissions, taxing on the carbon, fossil fuels, nuclear energy, grid make, or actually making solar cells available. So government has taken place a duty of, say, 30% on the solar cells imports recently. Now what will happen when we are evaluating business propositions, we're finding the IRR of a solar park is lower than our weighted average cost of capital, because its imports are at high import duty. So the whole ecosystem has to grow, because government intention is to grow the ecosystem of solar cells being produced in India, and there are PLI schemes that are being given also for that. But that system has to grow. It has to support. Only regulation will not help. That ecosystem has to be boosted by making the transition happen from the fossil fuel players. So if you see to Middle East, if you see, most of them are changing their names. Now it's all Total Energy, not Total Oil. Everybody is changing the names because they know in future crude oil will not be there. Okay, the demand will be reduced. They're moving to hydrogen. They're using SMR technology to actually from natural gas to hydrogen. So in India also, we need to have who will supply the energy. We have been buying our coal so far. In future, will we produce a hydrogen? Will our money go to hydrogen, or will money go to steel assets? So what government have to do, the ecosystem of energy, green energy has to be built in. Currently the oil producer has to transition towards that. The energy supplies to the nation, right? And automatically when the greening happens, everybody gets the benefit. Also the SMEs also get the benefit. This is some of my opinion, Kaushik, not at a stage for sure.
No. Thank you so much. Thank you so very much to the panel for sharing their time. So from a capacity build up to approaching the export marketplace, from the 17 SDGs and 169 targets, from personal to corporate to the nation, we've seen a vast amount of information being shared. This only draws us to one conclusion, that a 1 day or a 2 day affair only on sustainability will be able to disseminate the information that is locked up with speakers like you all on the panel. May I, on behalf of BCCI, thank you very much for taking out your time and sparing your valuable information with us. Handing over to Arnab. And if, Saurabh, if you have any comments to make, please.
No comments. It was wonderfully executed, and thank you once again from the panel, Somesh and Mr. Agarwal. Thank you so much.
Thank you,
It's
sir.
a privilege talking to you all. Thank you. Thank you.
Yeah, thank you so much. Thank you so
Thank
much.
you.
Thank you so much.
Thank you. So with this, we conclude this session. It has been wonderfully moderated by Mr. Brahma. We are immensely grateful to Mr. Agarwal and Mr. Bishwas to join with us despite of your busy schedule. Thank you again. With this, we conclude, and we'll be back again exactly at 2:30 with a very interesting session on Azadi Ka Amrit Mahotsav, leaving import dependency behind. Thank you all. Stay tuned with us. Thank you.
Yeah,
Thank you. Thank you.
Thank you.
Thank you. Bye.
Welcome back for International Trade E-Conclave. We are going to have a very engaging session. The theme of the session is Azadi Ka Amrit Mahotsav, leaving import dependency behind. We have very eminent speakers with us, Mr. Vish Padmanabhan, NSW Government Senior Trade and Investment Commissioner for India and Middle East, Dr. Deb Mukherjee, Managing Director, Omega Seiki Mobility, Mr. R. Mukundan, MD and CEO, Tata Chemicals Limited. The session will be moderated by Mr. Kaushik Brahma, Co-Chairperson, International Trade Committee of the Chamber, and Head Export Planning and Documentation, Tata Steel Limited. With this, I'll hand it over to Mr. Brahma.
A very good afternoon, ladies and gentlemen. A warm welcome to the panelists. And as we were discussing a little while ago, looking forward to hearing from you on the session which Arnav has already mentioned. Before we start, the chairman of our committee, Mr. Saurabh Datta, is also there. Would you like to make some opening comments, sir, before we take over the session?
A warm welcome to all the panelists, and we had overshot the time limit in the last session. It was so interesting that we ate into the time of the breaks. So if the same thing happens, please go ahead. We will shorten the breaks and we will have the discussion rather. Thank you.
Thank you so very much. So globalization, as we understood it when we went into the lockdown 2 years ago, has taken a completely different meaning. And the way the marketplace has opened up, especially during the lockdown times, and various markets closing down, various markets opening up, e-commerce going full scale, digital documentation, blockchains, and you name it, and the entire world open up to the trades. A few numbers to start with. A sharp 31% sequential fall in earnings from petroleum product exports following interventions by the union government. Trade deficit has been at a record low, and 100 billion for the first 4 months of the financial year. We have seen a 55% drop in the export of steel products, and we became a net importer of steel by the time we headed into November. All around, international markets and exports were under pressure. Today's session is to take forward our thoughts and views on how are we looking at leaving behind import dependencies, how are our own trades and commerce reaching out for exports to the world markets. To start with, logistics and supply chain costs. And it has been marked in many sessions that the logistics and supply chain cost for India is very high, which makes it difficult for us to compete in the international market. These are the major constraints of being competitive. I would like to hear your thoughts and your views on this subject, sir, starting with Mr. Padmanabhan. What do you think are the constraints or hindrances in reducing logistics and supply chain costs in India so that we become competitive in the international market?
Thank you, Kaushik. And that's very topical. And let me just answer that question by giving a little bit of background in the current trade negotiations between Australia and India, because they will serve to highlight some of the challenges that we faced, but also some of the initiatives that both countries have put in place. So basically, the audience would be very interested to know that there's a free trade agreement that's been signed between India and Australia, and that comes into force on the 29th of this month, which means that both parliaments, the Australian Parliament, lower house, and the Indian Parliament and central government have approved all the negotiated positions with regard to the trade agreement. And that will basically remove all the tariffs that exist between the two countries across agricultural products, mining equipment and mining services, technology, IT services, advanced manufacturing, defense and logistics. Therefore, under the raft of detailed agreement, there are a number of subcategories. I won't go into that right now, but they all serve to do two things. One is reduce the cost to import and export, and hopefully that will then flow on through wholesalers and distributors. The second is that the Australian government is providing significant investments for countries such as India, private and public investors, to integrate into the supply chain of Australia through various schemes. For example, there's a very large airport being built in Western Sydney, which geographically is close to Brisbane, Adelaide, and Melbourne, the major ports, seaports and airports, and railway freight. And the tenders are inviting countries and investors to participate in the architecture and the structure of the logistics movement of goods and services in and out of Australia. So that is one example of critical and rare minerals that India needs can be shipped more efficiently as India secures security for power and energy. So I just thought I would just share, Kaushik, one, the trade agreement, which is now enforced. Two, going to supply chain logistics, freight forwarding. Three, across critical minerals, of which Australia has 18 of the 24 critical minerals listed, such as lithium, cobalt, scandium, etc., all required for lithium batteries, which is a major initiative as far as EV self-sufficiency is concerned that the Indian government has announced. So these are all part of a strategic relationship between the two countries, knowing that India has got a very significant, ambitious plan, 2050 and 2070, to be net zero as far as energy consumption and carbon footprint is concerned. So let me stop there, Kaushik, in the interest of time, and I'll hand back to you.
Thank you so much, Mr. Padmanabhan. Looking towards Mr. Mukundan, your opening remarks on the subject and the discussion point, please.
Yeah, thank you, Kaushik. I think let me supplement what has been said by Mr. Padmanabhan by saying that, see, we did a study, I think about 10 years ago or 12 years ago, where we actually did it as a benchmark study for what does chemical industry, what is the impact of various costs which are there on the chemical industry. And two big costs, and I think one of them is the point of discussion today. One was energy costs and other one was logistics. And put together, the impact was about 7% on the cost structure, aggregating various sectors. I mean, some may be more, some may be less. I'm not getting into the detail. But 7% is a bit a lot when you talk about the profitability of the industry, which is about 15%. So effectively, what it meant was your profits could go up by 50% had these costs been very competitive. So it is not to say 7% more cost. Is actually to say how much your profit. So your return ratios will be more, your investments will be more, our capability to address and also, go more aggressively in the international markets will be more. And I think that was what we were highlighting. Thankfully, I think many moves have been made on the area of power, but I think a lot needs to be done there. More importantly, I think the several moves which have happened on the logistics side are very, very positive. I think more than power, I think the logistic issues are getting sorted out more and more. Clearly, the whole issue of the port-led development and port-led, the Sagarmala project, and you talk about Gati Shakti and the push in Indian railways to build those corridors, all these are coming positive, and also the whole push on building the road network, all this would play positively to us. What we have to do in many ways is to cut out the bureaucracy, which is what I think we've been telling the government in terms of, we had worked with government, 7-8 companies put together, including the new startup companies, new age companies, and the traditional companies, which included Tata Steel and Tata Chemicals. And we have really the ULIP, which was a Universal Logistic Interface Protocol, was really started there, and that became the Gati Shakti, if you recall. So I think many of us have spent a lot of effort in pushing ahead. Good news is the government recognizes the issue, and the good news is the work happening. The real issue for us is it fast enough? I think we need to be more ambitious, in my view, in terms of addressing these issues and not taking a lot of time. I think actually engaging with government to accelerate even more. The point which I think Mr. Padmanabhan said, I just want to put it in 4-5 buckets. Broadly, the first bucket is where India has no resources. He spoke about all the resources which are not there and which Australia can play a role. But also the second category would be where India has resources but has got restrictions, where there are restrictions outside trade, non-trade, other restrictions. And the third category is where India has resources, but we need to just get competitive. And lastly, the place where India has resources and we are competitive. So if you put it in 4 buckets and sort of analyze the market, one will quickly get to those items where I think we need to form partnerships to get the access to resources like in Australia and all. And I think it makes immense sense for Indian industry to be more, I would say, open about free trade agreement. One of the things I would say as we engage with government, also Indian industry needs to say, as we get more and more competitive, we need to be more open about getting, let's say, open access and open agreements between 2 countries. And I think many of this gets a bad press, also from our own, industry players, because really many agreements provide for a transition pathway. So firstly, I would certainly say engage with government is the first one. Second, engage beyond the shores of India in terms of opening up trade and not be closed, because this is an age of competitiveness. Whether there's a downturn for, let's say, threat of recession for next 2 years or 3 years is a matter of time. It will go away. But the real issue for us is to say, in the long run, what we want to do. And I think we need to engage on that point about striking the right global partnerships. And finally, I think the key piece in all this is also to play a very proactive role in putting together what I call a structural framework. As far as we know, one of the big problem which we have today is that WTO has taken a backseat. India has a G20 leadership this year. Can we as B20, where I think the business leaders are coming together, come and recommend to government on a framework which will allow the multilateral agreements to move forward? Today, it's becoming more and more bilateral. I understand the problem, but I think we need to also engage on this whole multilateralism. So, and what we cannot escape, Kaushik, is a point which we as an industry association, our task has to be to sort of make sure our members are very competitive, their cost structures are low, their competitiveness is high, and at the same time also evangelize openness, more transparent and open trade. So I'll stop here. Thank you.
Thank you so much, Mr. Mukundan. Dr. Mukherjee, I would like to reconfirm that the question that we are raising now is logistics and supply chain costs are one of the major constraints for being competitive in the global market. Your views, please, sir.
Thank you very much, Kaushik. And, I would like to supplement what Mukundan and Mr. Padmanabhan has already sort of highlighted. See, the cost of logistics in India is one of the highest in the developing countries. The government data shows 16% of the GDP, wherein the developed world, it is in single digit. So that, bringing it down to by 8 or 9 points would be somewhere around, $180 billion. So that's the kind of money that can be, or the liquidity that can be brought into the system if the efficiency of logistics can be improved. Now, I would like to talk about in the context of the automotive industry, which is where I come from, and I have some understanding of the industry. Automotive is a very, material intensive industry. And traditionally in India, there have been regions, we have Delhi NCR, then Pune and Chennai, wherein the clusters developed historically. It has not been a kind of a equally spread development across India, which I think is an opportunity with the EV coming up. That's a new world of automotive, wherein new clusters, for example, motors, electronics, etc., can be developed across the country. And also we are talking about micro factories, manufacturing, etc. So, in this context, today, the material movement are huge. For example, castings come from Coimbatore, machining parts come from Chennai to Manesar, and so and so. So there is a lot of back and forth. So there is a huge amount of inefficiency in this system, and these are basically, one of the direct inefficiencies. The time taken to travel. You send a truck from, for example, from Delhi, it can reach Chennai in 3 days. It can also reach in 20 days. There is so much of slack in the whole system because of various reasons. And all that adds inefficiency and obviously the cost in the system. Then reverse logistics is a problem. Then the idle time, the data shows that trucks are idle for about 10 hours in a day. That's the kind of non-value add, inefficiency in the system we are talking about. So that's one part. Secondly, as Mukundan pointed out, there is a lot of bureaucratic problems, and I am again talking in the context of the topic for today, which is export. How to make India export country. So traditionally, there have been a lot of inefficiencies again in the whole supply chain. In fact, we do not have a export enabling framework of logistics. Okay, so when I talk about that, there are inefficiencies. The cargo doesn't move; it gets stuck at the customs. The whole bureaucracy, paperwork, grievance redressal, etc., are huge problems, and things haven't really changed. Despite government making a lot of initiative, but there is so much of legacy issues, and it takes a lot of time for people to change. Secondly, before I conclude, I'll just like to make a point that, if India, we are talking about 5 trillion and also bigger, Mr. Ambani talks about making 50 billion, Mr. Adani talks about $30 trillion economy, then logistics have to play a major role in it. And in this, all the stakeholders will have to come together. For example, the road transport today accounts for 67% of the logistics. Railways are bare minimal because nobody trusts railways. Railways, organize such a huge organization like railway has to play a major role in haulage, in freight and movement, and also connectivity, etc. So I think overall the opportunities are huge to cut the inefficiencies, make it efficient, make it effective, and and the direct benefits in terms of monetary benefits and making getting more more cost competitive industry. The opportunities are huge, and even 1%, 2% will make India hugely competitive, and the whole supply chain will be more reliable to the international buyers, because that's a huge problem, and people don't really trust Indian suppliers that much. That's my thought.
Thank you, Doc. Absolutely bang on to what we are facing in the real life, in the real situations for all exporters. Just on the aside, we paid last year, I think, somewhere close to 18 crores for exporting some 40,000 tons to Bangladesh, because the detention at the border was about 45 days. 30 to 45 days was the detention. So I'm sure my colleagues and all our partners in exports are facing similar and even larger problems. So delving a little deeper into it, Mr. Mukundan already alluded to it, a lot of programs, some bringing lots of ministries on top, like the PM Gati Shakti program, and you've got the others like Make in India, Atmanirbhar Bharat, everyone focusing towards making us more competitive. Do you think these initiatives from the government play an important role, or at least pave the way forward for exporters to become more competitive in the global market and use the entire marketplace to share their products? Dr. Mukherjee, would you like to start?
Yes, we all agree, we all, the people in the industry, and we face these challenges, these huge bottlenecks and pain every day, and particularly, when your voice is not heard and your grievances are not addressed, then, it compounds the problem. Okay, problems are there, even in other countries, problems are there, but there is somebody to listen and address. So I think the point you made, the government intentions are good. I have absolutely no doubt. And secondly, there is a consistency in the intentions, with the present government. I can tell that, the whole infrastructure building, the Bharatmala and the other projects, the road building, connectivity, etc., is definitely improving. Although the amount of work that remains to be done is equally humongous, because we missed a lot of decades not building these infrastructure, so it will take time. But apart from that, the soft infrastructure, which is in the form of bureaucracy, the rules, regulations, paperwork, etc., also need to change. I think that is where things are not really being done. I'll tell you a very small personal example. We imported something from Korea, and that cargo is still stuck for last 4 months in a port, and the files are becoming thicker and thicker, and every fortnight I'm called there to give some statement to justify this. I'm being hauled up for importing something related to the automotive industry as if I've done a crime. Okay, and I think many of you can resonate with what I'm saying. So, see, this is the problem. If there is a problem, I should be told that this is a problem with your cargo or your paperwork or your procedures, and this is the solution, right? So, what I'm saying is these practical issues need to be addressed at some particular forum wherein industry, government, and the other stakeholders can come together and resolve it. The resolution of problems is a major issue where I think along with putting these hard infrastructure on ground, work needs to be done in a really big way if India has to really move forward, improving efficiencies and improving reliability as Indian supplier to the international world.
Thanks, Doc. Mr. Mukundan, you already have mentioned the various projects being taken on by the government. You mentioned ULIP and you mentioned the PM Gati Shakti. We are adding 2 more to that, Make in India and Atmanirbhar Bharat. And we would like to hear your views on that, sir. How do you think we will go forward? Is this the beginning of the right direction? So far, we have not done much. An integrated, organized direction taking appears to be on the cards, on the horizon. What is your...
So let me just build on what has been said just before me, and I think a very important point. So I'm going to give practical experience of ours rather than go into some theory. But one of the internal metrics we track in our logistics is rail-road ratio. How much of our goods are going by road and how much is going by rail? And I can tell you the profits increase when you move goods by rail, not by road. But for that, you need a solid engagement with at the regional level. We are in West, so Western region, and making sure things land on time, leave on time, and demurrages are less. I think it's a hard work. During COVID, when road transportation faced huge bottleneck at interstate borders, our on-time delivery was still maintained, I must say, thanks to Indian Railways. They stepped up, and they stepped up with availability of rakes, making sure movements happened. They were listening to us. Now, my question is, why does it take a crisis to become good? Why can't you be great in normal times? I think it is not that they didn't have capability. Suddenly, their capability went up. And I really sometimes wonder why that can't be displayed during normal time. Secondly, when you really look at it, I think our railways are really hampered today. One of the big issue is that I think the whole process of cross-subsidizing the road, the passenger freight with the cargo freight, freight movement, that has led to a situation where it doesn't compete well with the road transport. But in reality, it should. So I can understand about people who have smaller volumes, them complaining why road is so much cheaper. And fundamentally, we need to engage with government to say, you want to subsidize movement of people, make sure that it's subsidized through separate budget. Don't mix the two things up. The moment you start mixing the two, you end up in a mess. I think that in itself will open up a huge opportunity for us to move the needle as a nation in terms of railroad mix. The third element is, I think we are beginning to now see the benefits of coastal movement. Now, coastal transportation has to be, and coastal shipping has to become one of the key ways of moving goods. India is a large coastline, and I'm just saying that it's at the very, very nascent stage today. These are all things government is working. Most important, I want to say this, Kaushik, which I've been saying to the government ministries, is not to fix each one of them individually. You can't fix shipping, railways, and roads by not having one agency controlling it as a multimodal transport. We need to move it seamlessly from a ship to road to rail so that we can reach our destination and then back to road again. Because many times each one of them has been highlighted. Each one of them, there's a buffers built because every switch of mode leads to delays in goods moving forward. So really, I think policy framework is good. I think we are reaching the next level of excellence, which we must strive for, which is to say, how do we make sure that each of the pieces which government is addressing by putting investment and capital behind can deliver more efficiently for us. And I cannot but agree with, every 1% goes to save, making us more competitive. It's really what was said already. So our engagement as a uniform voice of the industry, we need to engage. Also, I think logistics is a big issue. It was never on the CEO's table. If you really look at when COVID came, it somehow highlighted the supply chain logistics as a key issue post-COVID. Now it is on every CEO's framework. Those risks are there in every CEO's table. We need to sort of say, can we build centers of excellence on logistics management? Can we get more people to become actually professionals in logistics? But very few professionals, they're all people who have drifted into that space by accident, but now they're getting seat at the table. And I think that talent piece also needs to get addressed.
Thank you, Mr. Mukundan. Mr. Padmanabhan, maybe the panelists are already echoing what you've been feeling and telling us in your opening statements. How would you like to mention your thoughts on this, sir?
There are two themes, and Dr. Mukherjee and Mr. Ramakrishnan have articulated extremely well, and they are down at the practical level. There are areas where India as a country has leapfrogged and done extremely well globally, and that goes to electronic payments and movement. So from an intellectual soft point of view, IT and technology are areas where India has leapfrogged, and indeed many advanced countries are coming to look at our UPI structure. ONDC is now in trial, which will do two things. One is it will remove friction in the system of commerce and transactions, and hopefully it will also remove unnecessary middleman and physical layers in the system. So that's one. But secondly, there's also another layer that I'd like to add over and above what my colleagues have so eloquently said. And that is that as India embarks on more trade agreements, EU is looking at an agreement with India. The UK is looking at an agreement with India. Middle East, we've just concluded, India's concluded, and of course Australia. So we'll see with the demise of the traditional globalization and multilateral agreements, more individual demands from these various countries and geographic blocks. So two things. One is productivity. That is a big challenge for Indian industry, and the reskilling that is required to equip India as a country to engage satisfactorily and honor its commitments going forward is going to be an emerging challenge as we see it. And, trade and this concept of Make in India is all basically hinged upon the efficiency of the points that the fellow speakers made. And that is the hard multimodal networks and integrated systems to grease the system and make it more efficient. Turnaround of ships from mining pit to port efficiency, etc., are going to become critical. And so that is I guess, twin challenges. And but on the positive sides, for example, Australian government has reduced and removed double tax of Indian professionals operating in Australia who had to pay tax in Australia and also tax in India. Now that has been abolished. That will increase the flow and the investment from Indian companies into Australia, and I'm talking about technology. So that's very encouraging. I just finished about last month, October, a delegation of investors from India, about 10 or 11 CEOs, looking at hydrogen and ammonia assets, power, wind, solar, and certainly the Australian government is making sure that they streamline all the requirements of investors. And our Indian colleagues have to move quickly because Korea and Japan are lining up to take advantage of the points that I made earlier. Now, the European countries will be doing the same thing with very mature port infrastructure in Belgium and other locations. And so I think the problem statement is there that we can all see of some of the challenges in India. The question now is, I think that there's going to be immense pressure. And I think Dr. Ramakrishnan had mentioned, or Dr. Mukherjee, why do we need a crisis? Well, India did have a crisis in 1990-91. My view is that over the next 5 to 7 years, when pressure builds, I think the country will have to respond to put a lot of these initiatives that would transform the economy in place.
So this dovetails into the next question that we had for the panel, and it goes in seamlessly. You were talking about the various treaties and agreements, and we were talking about the very difficult times that the rest of the world is facing, India standing out as a beacon. What do you think that India's trade performance is going to be affected by the various treaties and agreements that we are signing currently, and making sure that the path towards the global marketplace is opened up for the industry per se? Your thoughts, please.
Kaushik, shall I go first?
Yeah, please.
Yeah. So let me give the projected trajectory. Currently, about $17 billion bilateral trade, Australia-India, and that is slated to go to 40 billion in the next 7 to 8 years. Very significant growth, and that's across 95% of what India exports to Australia, and about 85% of goods and services exported from Australia into India. So that's very significant, and that cuts across all industry sectors. But let me just focus on two. And my government are placing bets, and my view is that space and technology and defense are two areas where certainly Australia is looking to participate and engage with India very, very strategically. I had the head of the Australian Space Agency, Enrico Palamo, come and spend a week here in Bengaluru. And we had about 15 startups in advanced technology and applications, satellite manufacturers from Australia engage with India. India is number 4 or 5 as far as launch capacity is concerned with ISRO. Great history, and from an economics point of view, well placed to increase its payload dispensary. But that is an area that has been privatized. You know, the government has made great initiatives, and that was public-private participation. We had the chance to provide inputs into the thinking of ISRO, and under the able guidance of the chairman, Goenka. So we're very encouraged with the foresight and the thinking there. Similarly with defense, the concept to privatize and bring private players in is another area, and Australia is heavily involved now with the Quad agreement with India, and that is quite strategic. So defense technology are two areas that we're very encouraged with, and so we see a lot of opportunity there. The free trade agreement that Australia and India have got in place is most favored nation agreement status, which means that any subsequent trade agreement that India cuts with so Sweden or UK or European Union, all those benefits will be provided in the existing contract between India and Australia. So I think that's very significant, and I think that India has provided great strategic leadership in those 2 or 3 areas that I mentioned, and we're very encouraged. And so I expect a lot of engagement and trade to go into those areas, for example, apart from the critical minerals that I mentioned earlier. There are about 17 companies that are open for investment, mining companies, which I've shared the prospectus with our Indian partners, and they are investment ready. In other words, the government has got tenements. They've got a very clean, open policy, very transparent for investors to come and start adding value and partnering there. Similarly, companies from overseas, 49% joint venture with India, then can tender for Indian defense contracts. Again, on the Indian side, great movement as far as the trade agreements are concerned. So I'm seeing some very good glimmers of hope in those areas. Kaushik, I'll stop there.
Thank you so much. Coming to Mr. Mukundan, the various treaties and agreements that the government of India is signing now, do you think they pave the way for the exporters to reach out to the distant marketplaces which were hitherto either subjected to the various restrictions, and we were not able to sell good quality goods over there? Your views, please, sir.
See, I think fundamentally, I think signing agreements, free trade agreements, especially with let's say something like Australia, countries in Middle East, Europe, or US, I think makes immense sense for India. We signed a free trade agreement initially with countries like Japan and Korea, and they are taken as examples of why it didn't work for India. But you look at it, Korea has a very small domestic market. Nothing much could have been exported from here. We would have ended up importing only from them. It was slated to be favoring them. I mean, in any case, I mean, in some agreements, it will favor the other country than us. I mean, we know, but we'll have to figure out how to play into the supply chain they're building. But look at the benefits. The benefits is the huge amount of manufacturing, advanced manufacturing just come to India. The Korean companies initially started with the assembly shop, but then have also upped the capabilities of suppliers, vendors, and I can go on and on. Even in the automotive sector, which Dr. Mukherjee has highlighted, they have benefited certainly from the Korean and Japanese partnerships and all. So in a sense, we've got to look at it. Does it add to our talent? Does it add to our future so that it enhances our future trade flow? Or does it give us access to market? The openings like what we mentioned with respect to the countries where negotiations have been going for long with EU. I mean, we've not signed as yet. We've had a huge amount of, there was supposed to be some fast track agreement with US, which has not moved. And with Middle East, I'm glad that with Dubai, UAE, there is a signing of agreement. But I think we need to push for more with Saudi Arabia and the largest markets there. And if we can move ahead with these agreements, they will be very beneficial to India, in my view. Already, these are net positive surplus countries where a lot of service exports already happening. To top it up, and the service export has given a good image of Indian talent, and I think we can leverage that. So really, the issue seems to be with us. We are the ones with withholding. I could not understand why would we not go ahead with an agreement just because there was a fear of wine import from Australia. I mean, it seems logical that if we get access to best wine while we sort of export our best of our products to Australia, we get access to lithium along with that. It's one of the two complementary things. With EU, the negotiations are struck because I think there's some value addition issue needed on automotive sector. But I think we have a logical point there. There are service sector needs greater access. So with every country, we will end up with one or two sectors, but I think they can't become the block on the overall overarching goal of building our stronger relationship. I'll tell you what is at stake, Kaushik. We have a golden opportunity of one of the youngest nations which can become provider of goods and services for the world sitting today. If we don't sign up and open ourselves up into partnerships with the wider world, we're going to lose that opportunity. And I think we must say that if not for anything, and we are today a very confident nation, we are a capable nation. We are not a nation 15 years ago, we lacked the talent, access to technology. I think our companies have done well and Indian talent has done well. So I think we have to view this with more positivism. I hope Bengal Chamber, when you meet your constituents, you're able to sort of, and this is mainly with the SMEs. I'm not saying big companies will survive. And SMEs rightly are afraid of, what will happen to them if the opening up happens. We have to engage with them as bigger companies to say, we will be there standing by their side, fighting for their cause, but let's all move together.
Thank you, Mr. Mukundan. Very well noted points. I'm sure Arnab is taking copious notes as we put up our recommendations to the various ministries and the bodies as we interact with them. Dr. Mukherjee, to you now. Your industry is the one which has been impacted positively and negatively for the want of good treaties with various countries. Today, your semiconductor chips are becoming a very key ingredient to stop the growth of our automobile industry. So, sir, how do you react to this signing? Is it paving the way again?
No, absolutely. I think, few things have happened of late. One, India is a strong, and internationally acknowledged strong leadership. Not only political leadership, I'm talking about economic leadership and the role we played post-COVID, taking the lead in exporting the vaccine, etc. I think this is phenomenal, for a country like India. Digitization, for example, penetration of smartphones, technology, communication. These are fantastic achievements, and this all happens when you have a strong leadership who acts decisively and makes decisions. So I have absolutely no doubt that the treaties being signed, the doors being opened, and it's not that we are going there with a begging bowl. They have more stakes, and few things like the geopolitical shift that is going to happen, and we are seeing it happening because of war, energy crisis, inflation, etc. And one very important point is that Europe, Japan, Korea, there's a population decline, and we have one of the youngest nations with abundance of educated people, young people who are willing to travel, who are willing to learn. They just need hand-holding, they need exposure to the world-class systems, etc. So I'll just make it relevant to the industry, that is the automotive. I think automotive industry, as you rightly pointed out, and Mukundan also said, we have gained a lot. And I will tell you, since I started my journey in the automotive in 1984, that was the year when Maruti came in, and we learned everything from Maruti. Honestly, I have absolutely no shame in saying that we learned everything today, the automotive industry, from Koreans and Japanese, even though Japan and Korea buy almost nothing from India, but that made us competitive. And our exports to countries like US and EU today are, the components exports I'm talking about is the EU and USA is more than 60%, even though these two big partners like Japan and Korea, who actually taught us everything, they don't buy much because they have their own, considerations. So whatever. So what I'm saying is, that is how it creates the competitiveness in the industry when you learn it and leverages it to your advantage. And this is what is going to happen. See, look at space, what Mr. Padmanabhan meant, out of nowhere, India becoming a huge space power, and this is a phenomenal achievement, even though being a government organization, run by and managed by bureaucrats, etc. Metro rail, Delhi Metro is another one. See, these are real successes which happened in India. I think these learnings will have to be taken, and when we make these FTAs, agreements, etc., we can become a global power in these areas, particularly energy, defense, space, and automotive. Automotive, as we all know, EV is going to be a huge, change in the whole industry. So this is where now I believe India's time has come. Even though globally, even though we are number 4 in car manufacturing, number 1 in two-wheeler, etc., our exports are minimal. Our global share is, less than 1%. That can change. India can become a big exporter of motors, for example, for the EVs. Okay, the software content in modern vehicles is 50% by value. Imagine 50%, 100 million lines of code has to be written in a vehicle like Tesla or these modern vehicles. Who writes these codes? Okay, this is where India comes in. The whole IT power that India has, the knowledge that we have accumulated. So this is where I think India will open the doors in these areas. Particularly energy is going to be huge. We are talking about hydrogen exports. We are talking about energy exports, etc. And these kind of alignments of like FTA with Australia and other countries, Africa is pretty much untouched. So I think these opportunities are huge, and this is the way to go. Industry and government have to come together, work together in sync, and whatever doors are opened by these diplomatic channels, industry has to get in and make use fully.
Thank you so much. Thank you so much to the panel. We are in the times of the World Cup. In 2010, they said it's the time for Africa. Come 2022-23, we are now saying it's time for India as we take center stage on the global platforms and the global marketplace. Thank you so very much to the panel for sharing your views, your thoughts on the subject, which is so relevant today. I'll hand you back over to Arnab for the next session. We have just been bang on time, Arnab. We must say thank you to us.
Yes, sir. Thank you for wonderfully moderating the session. Everything, we are just noting all the deliberation of today, and we will be coming up with a detailed proceeding with a set of recommendation. If we have any doubt in any of the particular paragraph or something, we will get back to all the speakers. I hope they will be able to help us in doing that. Thank you, sir. With this, we conclude this session. We are immensely thankful to Mr. Vish Padmanabhan, Dr. Deb Mukherjee, and Mr. R. Mukundan for joining with us despite of their busy schedule, and Mr. Brahma, thanks a lot for wonderfully moderating the session and keeping on time. And with this, we will conclude, and we will join back again sharp at 3:25. Thank you all.
Thank you,
Thank
Arnab.
you so very much. Thank you. Thank you.
Welcome back once again. We are having a session now on logistics infrastructure, the stage where all the traders perform. We have very eminent speaker with us, Mr. Adip Nath Palchodri, Director Service Business, Bamalori and Company Limited. Over to Mr. Palchodri.
Thank you. So, firstly, a big thanks to Bengal Chamber of Commerce and Industries as well as Mr. Arnab Chakraborty for inviting me to be a speaker for this session. I have around 15 minutes, so I'll run through a few slides and hopefully it will be of context and relevance to the topic at hand. Shall I switch over to sharing screen now?
Yeah, sure.
Let me. Is the screen visible?
Yeah.
All right. So, very briefly, to begin with, I am representing Bamalori and Company Limited, which has been in existence for over 150 years, and we are under the administrative control of Ministry of Petroleum and Natural Gases, and I function as the Director of Service Business. Now, what does service business mean for Bamalori? So this basically sums up the world of Bamalori. So as you can see, we've got a few manufacturing SBUs as well as a few service SBUs. So logistics, which comprises of logistics infrastructure, logistics services, and cold chain. These are the three SBUs, as well as travel and vacations. These are adding up to the services portfolio, which is something that I am accountable for on the board. This is around 1,000 odd crores, and it's the most profitable part of the Bamalori's business. Now, if I just move forward and to very quickly summarize as to what we do in logistics, is that we are having this logistics infrastructure, which is cold chain, container freight stations as well as warehouses, and cold chain, where we are currently having 4 units, one at Delhi, one at Western region, one at Hyderabad, and one at Bhubaneswar. So these color coded circles on the India map kind of tells us as to where we are, what do we do. And in logistics services, we are doing a lot of export and import freight forwarding. So this kind of sums up as to what Bamalori is doing in logistics and what I'm responsible for. And it also thus enables us to talk on the topic, which is logistics infrastructure, the stage where the traders are performing. Now, what do we mean when, okay, this is once again a quick summary of what we are doing. So what do we mean when we are talking about large logistics hubs, right? So India at this point of time is very much in the infancy. So if you can see, I've tabulated a few rise of a few ports, and over a 20 odd year, 15 to 20 year period, how a certain set of ports has expanded its capability, its capacity, and the ability to handle cargo. I'll take primarily Singapore as a primary example, whereas other ports are coming out of China, which already has a very strong manufacturing base. Singapore, however, is a trading hub. So a lot of things that they have done is something that we can potentially emulate over a period of time, of course, into making sure that India also becomes a trading hub by leveraging logistics. If you look at on the right part of the screen, we are talking about, this is something that is widely known. India's logistics cost is very high. We are supposed to be around 13 to 14. So there's no real data around that, but it's supposed to be in early teens percentage of GDP. And compared to that, some of the advanced countries is much lower. Now, what does it mean? So when we are trying to be becoming export competitive, this automatically implies that our products, primarily products, not as much of services, products would be around 5 to 6% less competitive to say something which is coming out of Singapore or from Germany or Sweden or US, etc., etc. So if we are able to enable and put together a set of slew of policies, slew of infra, which enables this cost to be brought down, it will make our exports competitive. Hence, we'll be able to perform better on the global arena as far as trade is concerned. Now, if you look at some of these ports as to what were the main reasons why these were successful. So I've just put together a few things: infrastructure, ease of doing business, multimodal connectivity, foreign relationships, policies, unified logistics platform. So if you see, it's not really feasible given the short paucity of time to go through each of these. But if you look at some of them, it will give you a sense as to where we are. Say, for example, multimodal logistics hub, right? So we have hardly very few multimodal logistics hubs, whereas in countries like Singapore, US, etc., they are very, very large in terms of hundreds of acres, everything coming together, rail, road, even maybe ocean. And that is how cross-docking is easy, value-added services is easy, overall warehousing is easy. So these things give a major boost to the way the traders would be successful, and that is how about leveraging. If you talk about policies and framework, India is doing remarkably well in the policy space over a period of time, of course. GST is an example of how warehousing became simpler, hence subsequently trading will become simpler. We are doing so much in terms of, say for example, Atmanirbhar Bharat. Logistics policy itself has come out in September. So many things are happening in and around logistics, which is going to make the whole thing, whole country much stronger, and hence it will be much more trade competitive, if I may use this word. So we've kind of tried to tabulate, if you see, some of the key factors and the kind of initiatives which are enabling. So if you look at infrastructure, we are talking about multimodal logistics parks. We're talking about Gati Shakti. Gati Shakti is a remarkable initiative because it puts together, I think, 16 or 19 ministries, make sure that the decision making is fast, smooth. Any particular stumbling block is addressed at a very, very high level in terms of bureaucratic level, I'm saying. So, and that is how things can be expedited. Mostly, India has always lagged in terms of project execution. So, time and cost overrun has always held us back. And so Gati Shakti, for example, is a massively enabling framework which cuts down on all of these. Then, okay, I mean, some of these you are able to see, but I'd once again touch upon another thing on technology, which is Unified Logistics Interface Platform. So now government is opening up. So this is going to be like the way UPI, Universal Payment Interface, has been successful in the payment space and the financial fintech space. This is exactly what is likely to happen for logistics. So logistics has always been very fragmented in terms of standards. I'm talking of technology, and hence it becomes very difficult for one entity to talk to the other. But now government is coming up with something called ULIP, which enables and opens up the platform for startups and so many other people to come in and talk in the same manner. There's another initiative which is also going to make a big difference, that is ONDC, though I have not talked about it. One Nation Digital Commerce, which is going to be a competitor, let's say, to Flipkart as well as Amazon. So once again, foreign relations or policies, I mean, we heard the previous speakers talk about FTA with Australia and things like that. So earlier we were talking about a regional cooperation, I think it's which India backed out of, but now India is signing up individual FTAs. So we've already, I think, signed up with UAE and UK. Obviously, that was very much in discussion. So when we talk about the initiatives, the combination of hard and soft, and that is how we are.
from আমাদের we have some network issues with Mr. Pal Chaudhary's end.
Are you able to hear me?
Now we are able to hear you, sir.
Sorry.
Absolutely
Okay.
fine.
So I think in the interest of time, I'll move fast. So India has got obviously great growth ambitions, and we want to also touch upon the modal mix. So, for example, if you look at some of the developed countries, US, Europe, you will see a far higher modal mix of railways and internal waterways as compared to roadways. India is very, very heavily dependent on roadways. So, India has got policies to change that as well. When we look at infrastructure, logistics infrastructure, just like the way you talk about hard power and soft power, and soft power of India is basically the culture, yoga, food, etc., etc. So in logistics infra also, you always have the hard part of warehouses, seaports, wagons, etc. At the same time, you've got the soft stuff, which is the information technology, the policies. I think this is where India is doing incredibly well, and as a combination of both things, of course. On the left, it takes a lot of investment, right, it takes a lot of application of mind and thinking and bringing together everybody, and that is where we are doing extremely well on the right side and the soft side. Take a few examples. Warehousing, real estate per capita. If you see where US is 47.4, India 2.65, so the opportunity, the headroom is phenomenal. And if you see the growth rate in the last 5 years has been exceptionally well as compared to the previous 4 years. So it has doubled almost. The CAGR of growth of warehousing has actually doubled in the last 5 years, the last 4 to 5 as compared to the previous. Example, cold chain. Cold chain is something that is very relevant, and that is also having a steep growth curve as we move forward. India is big in pharma, big in agri, but a lot of agri gets wasted. So if we are able to harness and put together the right kind of cold infra, in that case, that will make a big difference as we go forward. I have a few slides because why I'm talking about cold chain and subsequently talk about MMLE is because these are places where Bangalore itself is doing, and we actually have some experience. Then let's move forward. So multimodal logistics park, what are the benefits? I think most would be knowing. Intermodal freight handling, value-added services, improved warehousing. Now, if you look at a typical logistics park, it will be around 100 acres, which has got rail tracks, which has got container yards, warehousing, value-added services. So now, typically, our logistics parks used to be much smaller. They'll be like not a park really. They'll be doing one thing, either a truck terminal or a train terminal or warehousing. So they would be very single focused. Now the thinking is much broader, and government is actively encouraging, and private parties are putting in a lot of money. And there are some examples of MMLPs which are already in shape, already in place, as well as there's a massive amount of investment which is expected to come in multimodal logistics park. So Bangalore has once again come up with a 53-acre logistics park in collaboration with Vizag Port Authority. It's a JV. And these are the kind of things that we've got railway siding, open yard, warehousing, cold chain, container freight station. So the idea is bringing everything together under one place. So a few pictures, but that's not that important, I think. So I'd like to conclude because the topic was about trade and being a stage. And so I have to, I think, quote, I think William Shakespeare, where it says, all the world's a stage and all the men and women merely plays. They have their exits and entrances, and one man in his prime time plays many parts, his act being 7 ages. Now, what are these 7 ages? It starts as a baby or an infant, grows to be a schoolboy child, then it becomes a young lover, subsequently a soldier, justice, subsequently old man, and extreme old age. Now, it is up to the audience as well as everybody of us to determine as to where exactly India is in its stages or 7 ages of journey in the logistics play. But I would assume that we have crossed the schoolboy stage and we are entering the stage of that of a passionate lover, where we are completely believing in our growth story, and hence logistics infra and logistics overall is going to play a phenomenal role in terms of making it happen for us. So that brings us to the end of my presentation. So I'm going to stop sharing and subsequently make myself available for any Q&A, if at all.
Thank you, sir. Sir, we will be collecting all the questions and we'll send across to you, and we'll be preparing a presentation. We'll be preparing a proceeding based on the deliberations of today, and we will get back to you if we don't understand anything, any of the part, and if we want you to guide us on anything. So thank you a lot for a wonderful presentation, and very wonderfully conclude the session with the quotation from Shakespeare that so we would conclude this session on logistics infrastructure. Stay tuned with us. We'll be back again in a couple of minutes. We'll start the session exactly after 2-3 minutes, so please stay with us. We have very eminent speaker with us who would be talking about India's trade relations and lots of treaties, agreements and all things, particularly post-COVID. What are the things those have changed? So thank you all.
Thank you, Mr. Arnab. I'm going to be leaving, so I wish you all the very best of luck for the program.
Thanks. You, sir. Thank you.
Yeah.
Welcome back once again. We are going to discuss about various trade relations, particularly post-COVID. We have very eminent speaker, Dr. Proveer De, Professor, Research and Information System for Developing Countries, RIS, New Delhi, with us. Now I would request Dr. De to please deliver your special address on India's trade relations post-COVID. Over to Dr. De.
Thank you. Thank you very much, Mr. Chakravarti. Namaskar. And what I'm going to do for next. How much time do I have for?
Sir, around 15 to max 20 minutes. Yeah.
Can you enable my PPT sharing?
Sir, I'll give you the co-host side and I'll
Yeah.
just give us 1 second. Just give us 1 second.
So what I'm going to do for this next 10, 12 minutes, I will speak the current scenario in India's trade. Then I will also touch upon some of the global issues, because international trade you cannot separate without discussing the global issues. And then since I'm working within Policy Research Institute in Delhi, I would also like to address some of the challenges that India has been facing and what could be the way forward. So about 10, 12 slides. I think I won't take more than.
Sure, sir, you can upload that.
Yeah, I can share, right?
Yeah.
This is which one? I think this one. Can you see this?
Yes, sir.
10 December, right? Every time. Well, let me just come to this way. Yeah. See, you will agree with me, or some may disagree, that the world is slowly entering into a polycrisis. Polycrisis means a gloomy world economy where you see very rising inflation. That's in short.
Sir, just sorry for interrupting you once again. Can you make it a full screen, sir?
No, full screen, it is difficult because in Zoom, if I put a full screen, issue is that the slides don't move ahead or rather go back.
Okay. Sure, please.
So this is, so what I like to start, telling the audience and the participants here that the world is very much getting into a polycrisis. Polycrisis means, the way the economists explaining it, it's a global world economy where you see the countries facing high inflation. Now, Adam Tozin in Columbia University, in his op-ed, he just said, which I quote, that, and I read it out, that very interesting, that today the disparate shocks interact so that the whole is worse than the sum of the parts. So you can understand the crisis, and it's where the explanation, it's become very, very serious discussion, serious thinking, policymakers across the world, particularly the bank and IMF, very, very busy time for them. Many countries approaching, particularly South Asia, Sri Lanka, Bangladesh, Nepal, all, to some extent, they approach the IMF for some kind of a support. Now, there is a two world, right? West and Russia plus China. It seems that Ukraine has to win in the war. There is no other alternative. Ukraine has to win in the world. That's kind of, scenario is unfolding. And this becoming kind of an, a very, very high, serious implication in terms of security, both energy, food, etc. And on top, many countries, like China and some other countries across the world, still they are lingering with the COVID-19. As we have seen that the recent, the scenario, the recent, what we have seen in China, that the iPhone factories, workers, and huge amount of agitation. Chinese government has, I think, agreed to relax some of the COVID-19 zero COVID policy they have taken. So these actually, one hand you have a Russia-Ukraine conflict. On top, you are getting a kind of a lingering effect on the COVID-19 to all over the world, directly and indirectly. This two way, one can explain. This is the long-term damage. If next year, for example, if Sri Lanka doesn't come back to the growth path, then it will have a huge impact on the next generation, right? Today, Sri Lanka is having 64% of their inflation, whereas India is 6%. Next year, if we don't stop the war, then it will have a huge impact on the world economy, both in terms of, as I said, energy, food, prices, and all going to affect India's trade. There's no doubt about it. That's why IMF, the latest edition of the World Economic Outlook, and we see the economic outlook for September issue, all of them was actually revised the growth forecast, and GDP slowing down means it will have certainly a linear effect and very straight effect to the trade as well. Now, that's the problem with the Zoom; it doesn't move. So what I see in the trade part, it's a kind of a very, very high, darkening world trade outlook. If you see the WTO's trade forecast, many others who have come out. In short, I'm not going to read out the data. So in short, that all countries, the regions, by regions, they're revising their trade forecast for 2023 onward, and two primarily it will be driven by the energy prices. Second is the agricultural process food prices. So these two will be certainly, having a very strong impact on the merchandise goods. If the merchandise trade slows down, services will also slow down. The countries will not buy the services, particularly the developed countries. And services-driven economies, they won't see a kind of a structural change is happening. They expect it, during this time or before the COVID-19. So what in the introductory part of my talk is that there is world outlook, both in growth and trade, is not very forthcoming. We have to be very, very careful. Now, where is India in it? I think the quick numbers, for today's talk, India's very difficult to understand. I said it offers a mixed results kind of thing. And I picked up as a 1991 to latest data from the IMF DOTS. We have to be careful reading the data, by the way. You call that India is almost touching 1 trillion global trade. Its share has increased for 2% of the world trade. India's exports has increased in 390. But this export means it's also value plus it's also carrying inflation, right? So it's the countries that are passing the inflation from one to another. And that is why it is a cyclical effect, or some effect, telling it's a multiplier effect, that if Bangladesh exports with an inflation, is certainly will have an adding inflation to the importing countries. So what I see, India's mixed results, because as inflation driven, the currency devaluation, or all this actually added, high number for the export and import. One has to look at it. Okay, in value terms, this is and very often it's a very quick, it's encouraging one. But what about the volume one? Is the number of automobile cars, 1,000cc engines has grown up between 2000 2002. That's those kind of serious analysis is required, which I have done. So India's share, in one hand, it has increased the global share 2%. India is going to exceed the 500 billion exports next year. But India is also having a big challenge in view of its domestic economies. And we know very much the growth forecast, all of them, if you look at an average median one, it's India indicating a slowing down in looking at the world, what's happening. Rising inflation, shortage of several things. So in short, it has kind of a mixed results. One is, while the trade is concerned, still 2021, this is a very encouraging figure. But if you count what's happening in recent year, with the uncertainties across the world which are unfolding, this also indicates that India's, the good time may not sustain for long. That's, I can tell. But in between, we see three structural shifts. If there are many other several documents, but if I compress in one slide, and if I tell you that one thing, good positive side from India is that it's coming back, on the trade front. Trade openness is rising. Otherwise, it was a declining trade openness from 2017 onward. So the rising trade openness means the country is showing more towards the trade. Second is there's a compositional change in a shift in goods and services exports by products. India is, exporting more value-added items. India is more exporting value-added services. Point number three is India's rising participation in the global value chains. We need a complete one day to discuss about the value chain aspects, but trust me that there are many new studies based on the input-output data, which is very serious data, globally. Multi-region input-output table data indicates that India's participation in the global value chain is also rising. Means the companies here, they are, getting integrated globally for particular products, or one particular company producing value-added services depending on the markets. So this kind of specialization, the goods and services are also, there very much. So three, to me, are the structural shifts. And if you look at the trade relations, which is a lot of diplomacy and the kind of things, India is champion for multilateralism, right? India is founder members of the bank, IMF, World Bank, United Nations, etc., etc. But gradually, India has moved over 75 years from the very rules-based multilateral process from there to South-South, which is basically the trade between the developing countries, then trade between within the neighborhood, so etc. So in short, that India continues to focus more in the neighborhood, right? Like the bilaterals that we are negotiating with Bangladesh. We have a regional FTA with the SAFTA, which is presently not working. Well, but there are many other projects, many other initiatives which are which shows that India continues to focus on the neighborhood, South Asia, Eastern South Asia sub-region, ASEAN, Southeast Asia, BIMSTEC, etc. Many of them are basically political initiatives, but there are some serious trade as well. And the recent one, which I think India, part of Indo-Pacific through the IPEF, Indo-Pacific Economic Forum for Prosperity, India negotiated a UAE, Australia, and SECPA with the UAE and Economic and Technology Cooperation Agreement with Australia. Some may tell this is a lose-lose kind of thing and not very serious. But well, bilateral sometimes give you access to the technology, a lot of other resources, which the multilateral process difficult. And then there are several of the bilateral going on. So like UK, Brazil, New Zealand, Israel, UAE, EU, etc., etc. So what do we see? This is again, purely my view that India's picking up more the bilateral free trade agreements. This is the kind of a post-COVID scenario. Why? What exactly influence in India? India is a champion for United Nations, multilateral forum, WTO, GATT, etc. From their bilaterals, because the bilateral, as I said, is easy to manage, easy to handle, less responsibilities, and then if you have a strategy for the bilateral free trade agreements, you get more benefits out of it. That's what. Sometimes, you have also continued to be part of a regional programs to becoming a regional power. So that's why IPEF, Quad, EAS, all those things are there. The moot point, the bottom line is that it is the free trade agreement of different types, which are India is, very much part of. There are 46 in numbers. There India is already implemented. Some of them under review. But India's regional trading arrangements, by the way, it is, if you put up a middle line, it's all with the southern neighbors. There are serious debates that by doing a free trade agreement with the southern neighbors, the developing countries, how much will you get in terms of technology transfer? How much you get in terms of your science, technology, innovation? How much you are going to do, in terms of resource mobility? You need to have a north-south kind of that the Vietnam has done, or Singapore in that way. But India somehow, trade is part of, kind of, geopolitics. We cannot see separately. So this is a point, one has to debate that we may need to have a free trade agreement with the United States of America or some of the countries in the European Union. Last part, that India's unilaterally has done tremendously well, right? As some said in the trade policy that if you build a very fast, good quality hotel, your own people may not stay, but you invite the foreigners. And if you continue to devalue your currency or in some way depreciate, you earn more and more. So what is the choice? That you need to offer a good hotel for your own nationals, or you'd like to offer the same thing for foreigners. So what India has done is actually, liberalizing trade facilitation improvement, huge amount of that heavily documented. From my university days in Calcutta, 1991 onward, I have some data and I can compare easily. From 37, 38 number of documents, all that India has just reduced it to number 3 documents for trade purposes. This is, once you reduce these documents, automatically the faster trades happens. So if you have a more import will be, growing more faster than their exports. So that's what, you will continue to have a deficit. But India needs more import to rise their exports. There is a very strong linkage. Second is the free trade agreement, unilateral improvement, the trade facilitation is actually helping India to join the global value chains like the automobiles, the computer, the medicine, the pharmaceuticals, the tablets, the telephone, and then it comes to the Apple iPhone and 13 and 14. The Foxconn, Pegatron, and Wistron, and the Tata, they all joining with Apple iPhone manufacturing, and expected that by 2024, 5% from current 5% to 12% of the all world's manufacturing Apple's iPhone will come from India. Presently, it is 70% above from China, but there are issues. So this kind of sophistication, if I may use the word, happening in international trade. Now, India certainly has restructured its policy, like the PLI production linking incentive scheme, trade facilitation. Those are very, very supportive. And these very high capital intensive global value chain products. So this is one success stories. But there are also issues, and these are also applicable to those who are manufacturing and exporting from eastern part of India. India has introduced, if I may say that, some of the heavy documentation part of your trade, like that rules of origin complication, the Carota rules in 2020. So these are actually not supporting in the way we expected India's participation in global value chain or regional value chain. So here, chambers of commerce like Bengal Chamber and others, they have a strong role. They need to tell to the government that kindly remove the Carota, which is, India introduced during the COVID time to stop, third country goods routing through, passing through the FTA members. So those need to be removed. And simplification of rules of origin, those removal of the non-tariff measures, dealing with the inverted duty structure. These are all going to strengthen India's participation in the global value chain. Second is India is also has shown this reversal of the trade liberalization. It is not that all the time we are reducing our custom duty, right? I have just picked up the tariff data, which is the MFN and simple mean, simple average for all products. Normally, you are right as long as your tariff is under the bound rate in WTO. But if you have reduced, custom duty from 110% to 10%, and then if you rise it again 20% above, then it doesn't look nice globally. So India has to be very, very consistent in terms of its trade liberalization initiative. And we have seen that India, it is a big nation, big power. They need to do things which I think very much, give an inspiration to others to follow. So somehow India must have realized that rising tariff is not the solution. So that's why in the recent years, they have again started reducing it. Last part, another one, which is trade policy in the post-COVID, in the NTMs, non-tariff measures. Very quickly, these are very complicated things. It is very difficult to just say in one slide or just few words. These are centered in phytosanitary for agriculture, technical barrier to state for the goods. These are the standards of the trade, and these are every country impose it. And those are very much highly consistent with the WTO. But there are non-WTO NTMs as well, NTBs as well. So which are targeted particularly India. So these are that we need to look at more closely those WTO which are not consistent, non-tariff barriers, and we need to take it up with the WTO dispute settlement or some other mechanisms. India has done relatively well in trade facilitation, but if you compare, now World Bank doing business database has been discontinued for some time, or logistics performance index, so it's difficult to get any comparable data. Earlier we used to get, but if you go by 2020 to the last one, India has done relatively well in border compliance, but still documentary part still there. So India has to take a unilateral efforts again to restart trade facilitation. This was discontinued for some time, but due to the COVID. So point one, that if you'd like to move up in this crisis period, that unilateral trade facilitation improvement will help India's small little exports heavily. So marginal return would be very high. Second is, if you look at the geopolitics, that every country is now, that one is that Ukraine has to win in the war. And second is, we need to look at globally more into rules based, so that Ukraine-like scenario doesn't appear. So maritime connectivity driving the Indo-Pacific, which is very important because countries joining Indo-Pacific. America is telling it a strategy, but India is telling it is an initiative. This kind of convergence or divergence of their concepts, whatever you call it, but countries are very much agreeable that they need to move this Indo-Pacific. And so maritime trade, maritime connectivity, this will continue to be in the prime, the drivers of this, integration process. So, and we need to strengthen our maritime linkages. India is very fortunate to have 7,000 square kilometer of coastline. Second is that may not be, we may not need to, very concerned about the number of FTAs that we have signed. It's like, in some of my studies, I've indicated there's more trade. You sign an FTA, just create a trade lines. It is a kind of a road or a path that you create for the exporters and importers to do more business. And it's possible to move if you are a member. Like India is not part of a member of RCEP, but it's possible for India, to go to RCEP because India is part of a bilaterals with some of the RCEP members. So it is simply like underground metro station. You stand in somewhere, and you can easily change the the railway line, underground line, to go to another destinations. Very simple way to present it. And then the trade policies, that we have now presently, IPEF, which is being negotiated by 14 countries in the Pacific Economic Framework of Prosperity. India is one of the founding members. But see, until India and USA, they settle down their trade relations, it's difficult to, on the IPEF, on the trade part, it's difficult to come to a convergence for all the 14 members. In any way, India has decided to be opt out from trade pillar. India is part of supply chain, environment, tax, etc., etc. So here, that India and USA trade relation matters a lot for the success of regional trade programs like IPEF. Okay, last slide. That what I can conclude and implications: the world of polycrisis, slowing down of growth, trade, high inflation, high debt distress. Just to add here, 1st January till 31st of June, Bangladesh has to repay the first installment of the Belt and Road Initiative loan they have taken from China, something about $4 billion US dollar. They can't do it. They can't. So they have to go to the IMF again to borrow some and do some readjustment. So every country is, indirectly or directly in the debt distress. So this is what we call that we have to be very careful, very slow when we talk about your trade policy. There's high uncertainty and high recession risk as well. And then what I think that India and other developing countries and in the trade partners, this is the time that we need to have a very strong, solid, robust macroeconomic cooperation. In a previous webinar by Bengal Chamber, there was some discussion, and I don't remember when it was happened. And I found, similar kind of sentiment is coming up that please allow central bank to do their own, work. Don't interfere much. More independence to be given, more independence for fiscal policy management, exchange of good practices, etc., etc. There was a discussion, multilateralization of swapping arrangements in the regional context, etc., etc. Now, what India's role here? Keep up our agricultural market because a large population is part of it. We need to also take as emergency needs, strengthen the supply, and then strengthen our relations with our multilateral trade through our bilateral partners, regional partners. India has done well during the crisis time in terms of trade facilitation, but there is still scope for further improvement. We need to keep in mind, it has been always highlighted politically that in the media that there's no point for going for an FTS. It's not that an FTS can give you every time all high dividends. It's not possible. So we should not be very worried about it. We have to be very selective in terms of picking up the quality of it. So these are, some of the takeaways, from my presentation. Thank you very much.
Thank you, sir. Thank you. With this, we conclude this India-State relations post-COVID. We are immensely grateful to Dr. Dev for a wonderful presentation. And we already have our guest of honors, Mr. Sanjay D. Nayak, Deputy Managing Director, International Banking Group, State Bank of India, with us. Please stay tuned with us. We'll be coming back in few minutes. It's 4:12 in my watch. We'll start the session sharp at 4:15. Thank you. Welcome back. We have our guest of honor with us, Mr. Sanjay D. Nayak, Deputy Managing Director, International Banking Group, State Bank of India, on India's decade, evolving global economy and role of international banking in catalyzing the growth of international trade. This will be the valedictory session of the entire day's conclave. We have started with trade finance. We have covered the infrastructure related with the trade, particularly the port infrastructure. We have covered sustainability factor. We have covered how it's an Azadi Ka Amrit Mahotsav, leaving the import dependency behind. We have covered the logistics infrastructure and how it is going to shape the entire ecosystem of international trade in India. We have also just completed various trade relations and how it's impacting the overall India's future in terms of foreign trade. And now we are concluding the session with our guest of honor, Mr. Sanjay Naik. The topic is why it's India's decade, evolving global economy and role of international banking in catalyzing the growth of international trade. Just now we have come across with various treaties and relationship that post-COVID, though the situation is quite gloomy, but why would you think that it's now it's the time, now it's India's decade? In one way, the volatility of exchange rate, sometimes the euro dollar is coming down, coming up, US dollar is going up, going down with the Russia-Ukraine war, lots of treaties and agreements, G20. So all the dynamics of the events, why would you think that it's India's decade? Over to you, sir.
Yeah, thank you. Thank you, Arnab. Good evening to all the distinguished audience, including the industry fraternity and media community. Bengal Chamber of Commerce and Industry, with its 189 years of history, is one of the very few long-standing organizations in India, just like SBI, which itself is more than 215 years old. And I appreciate the efforts which are being made by the Bengal Chambers in bringing various stakeholders together and playing their part in building synergies to stimulate trade and investment and also supporting policy making. I thank you for inviting me to address this plenary session about India's decade. Yes, it is truly India's decade. If you look around the world, currently most of the developed world is affected with prolonged stagnation, rapid interest rate increases, monetary and fiscal tightening, and cascading effects of COVID-19, war in Ukraine, etc., etc. IMF as well as United Nations have been projected that the world economy itself may be entering into a state of stagnation. However, if you look at India, the picture is different. It has clocked 5.5% average growth in GDP over the past decade, making it the fastest growing economy in the world, major economy in the world. And lead economic indicators, even at this juncture, vouch for its sustained resilience in an uncertain and hostile global environment. Coming to India's exports crossed US $400 billion mark in financial year 22, first time in a fiscal year, with merchandise exports reaching by 43% over FY25. That year it was $292 billion. In the first half of current financial year, overall exports have crossed US $445 billion, 20% YY growth over the last year. And there are multiple stimulants that have generated this kind of optimism for India, and it is going to be the front runner in the coming decade. If you look at Indian budgets, in the recent past, these budgets have been primarily focused on capital expenditure, and that has ensured that India is able to absorb the external shocks. And besides that, government of India has come up with this interest-free 50-year loans under the scheme of special assistance to the states for capital investment, and that is getting good traction. So overall, there will be good investment in the infrastructure development. We are definitely set for a decade of infrastructure-led growth, propelled by the ambitious Gati Shakti National Infrastructure Pipeline, National Monetization Pipeline, etc. These particular aspects were covered in the earlier sessions very well by various panelists. And I was listening to these discussions right this morning, and they are really very useful. Besides the monetization or Gati Shakti related areas, measures like PLI scheme, one district, one product are expected to give fillip to exports and link India to global supply chain. Just as the previous speaker mentioned, India has been expanding the set of free trade agreements like the Comprehensive Economic Partnership with United Arab Emirates, Economic Cooperation and Trade Agreement with Australia, and these are expected to widen the market for Indian products. there is going to be a China plus one strategy that everybody is aware of, and it is going to gain steam after the pandemic to enhance supply chain regions, with India being an important alternative for diversifying manufacturing hubs owing to its strategic location, vast domestic market, skilled labor, and cost efficiencies. Now, all these initiatives mentioned above are aimed to make our commodities or our products more competitive in global perspective, both from the quality and cost perspectives. However, if you look at the numbers, India's share in global mercantile trade is still less than 2%, whereas for China it is 15%, USA it is 8%, which means that there's a lot of scope for improvement so that we claim a rightful place in global trade arena. Now, where does international banking come in this? So, international banking comes in catalyzing growth of international trade. If you look at international trade, it's real smooth because of one particular ingredient that is called trade finance, and the banks are the only purveyor of trade finance for running the international trade. Banks and financial institutions, they are the important facilitators of international trade through their specialized trade finance products and provide guarantee payments for around a third of global trade, which was $22.3 billion last year. They offer substantial benefits to the business partners like buyers and suppliers that include payment and commercial terms, risk coverages, liquidity, working capital optimization, improved cash flow, forecasting, and flexibility. However, as in many other areas, a large share of this international trade finance, about 30%, is supplied by a relatively small group of 40 globally active international banks, with local and regional banks supplying the remainder. Now, I'm glad to inform that SBI is also finding its rightful place among the top 40 global banks which are active in international trade. Currently, our international banking book is of $65 billion, out of which one-third, that is about $22 billion, comprises of trade finance. And we have got the largest overseas presence among the Indian banks, with 233 points of presence across 30 countries through our branches as well as overseas subsidiaries. Apart from traditional products of trade finance, like documentary credit, bank guarantees, buyers credit, suppliers credit, supply chain financing, SBI is also into secondary market syndications and trade loans with credit wraps from ECA. Now, what is an ECA? ECA is a specialized export credit agency. Many of our exporting customers find that they cannot export to certain areas because of prohibitive cost of credit, or maybe there is a credit risk. Of course, in India there is a ECGC, but ECGC may also may not like to lend or extend cover in certain areas. But there are international insurance agencies which are willing to kind of provide cover protection for taking exposure in such areas. So we do even this kind of a lending. SBI has been sensitive and adaptive to international market dynamics by reorienting its strategies in response to global change. As you may be aware, as those who are in the industry may be aware, gradually the dependence on traditional routes like letters of credit is going down for international trade, and it is moving towards open account. So for that purpose, SBI has been participating very actively in receivable and payable financing under factoring. And this was introduced by us about 4 years ago, and it has been a great success. Similarly, we have been partnering, collaborating with various fintechs to expand our outreach to the local communities. We are aware that in the coming year, there will be some headwinds, as I mentioned at the beginning itself, because of the situation prevailing in many developed countries. The demand for goods may go down, and that may impact exports from India. However, as I mentioned, currently India's share in the international trade is very low. It is just about 2%. So we have got ample scope, even in such times, to make further inroads and try to acquire larger and larger space. Amid uncertainty and increasing volatility for commodity prices, many banks have scaled down their supply, but SBI has remained firm. We are very optimistic about Indian business community's ability to overcome the challenges, and we continue to support India's export and import trade in a big way. Coming to India, despite strong domestic growth, there have been certain headwinds which have seen. However, as I mentioned earlier, with the certain steps being taken by the government, these challenges will definitely be overcome. There are certain initiatives which have also happened in India recently. Those of you who are keeping track of RBI guidelines, RBI recently issued guidelines on settlement of international trade in Indian rupees through special rupee escrow accounts, and accordingly, Indian exports imports can be invoiced in Indian rupees with the set-off mechanism of export receivables against import payables through the special rupee escrow accounts. Apart from promoting growth of international trade with focus on India exports, this shall help in internationalization of rupee and easing of pressure on India's forex reserves. We may be aware that almost 98% of international trade is denominated in dollar, and one major reason for that, almost entire oil trade is denominated in dollar, and the current many or almost all countries are forced to maintain reserves of dollar with them to settle their trades. So, in order to reduce the dependence on dollar, India has come up with this particular facility that export and imports can be invoiced in Indian rupees, and the same kind of benefits which are available for hard currency exports will be available even for exports which are invoiced in rupees. Further, in 2021, a consortium of 15 Indian banks have created a blockchain trade finance consortium called Indian Banks Blockchain Infrastructure. There was a mention about this in the morning when there was a panel discussion on trade finance. So such deals have already started happening, although I would say these are just baby steps and we have to go a long way. The technology will initially target domestic letters of credit and aim to cut transaction times from 4 or 5 days to a matter of hours, apart from eliminating voluminous paperwork. Enhancing digital trade facilitation will be crucial to increase resilience to further trade disruption and mark of India's participation in global value chains. So, with this kind of steps which are being taken, I am pretty sure that India will emerge as a new league destination for global supply chains. There is immense potential for trade opportunity from India, and we shall strive our best to bridge the gaps between the requirement and the availability of trade finance while working closely with all stakeholders. I thank you once and all for being part of this session. Thank you very much.
Thank you, sir. It was a very enriching and thought-provoking address from your end. And so we are coming up with a proceeding with a detailed recommendation which we'll be sharing to the government. And in anywhere we will stuck at any point of time, we will email you, and for your guidance, we look forward to that. We're immensely grateful to you, despite of your busy schedule, you have joined. Thanks to.
Thank you.
Thank you, sir. We thank all the sponsors, all the audiences. A special thank goes to all our members, our chairperson, Mr. Saurav Datta, Mr. Kaushik Brahma, everyone, Mr. Chatterjee, for making this an E-Conclave a successful one. And special credit goes to definitely to Tanya Chakraborty and Munmun Chakraborty for tremendously worked hard and making this conclave possible. And most of all, we thank to all the audiences for listening to all the, or what should I say, the entire flow of the event throughout the day, even after such a very important games yesterday's night. So thanks to all the audiences. With this, we conclude this International Trade E-Conclave, and Thanks to you, all of you. Thank you. Sir,